This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Focused on Bristol Myers. Earnings
Yes.
orgy. I mean, this morning, Bristol Myers just out. Revenue beat. Expenses in line. Stock gets a little lift. I mean, there's 482 companies we don't talk about before we talk about Microsoft.
I know, exactly.
Or Meta.
Bristol Myers Squibb, they have 34,000 employees. I forgot about that. Huge company, got about $100 billion in market cap here, putting up some decent numbers. Big pharma, it seems like...
Doing some historic work in cancer is
exactly.
the bottom line.
Exactly.
We welcome you all. We got 3 hours ahead here. All the usual touch points. There's a big mining transaction.
Yep.
Got Microsoft. Today's Google this afternoon, too.
Yeah, I think we got all that.
Okay,
kind of
Alphabet.
Some more
Okay,
text.
it's Google.
Microsoft, a little company out there,
Pick
too.
up the pieces on Facebook. Mandeep will be with us in the 8 o'clock hour. We're going to start strong with Ben Laidler on equities. We got some economic data today, always important. But the GDP number, to me, I mean, Atlanta GDP now, which most of the adults go to, is 2.7%. Guess.
Yes, I know. I mean,
First guess.
This economy, it's still growing. So if you're the Federal Reserve, no need to rush, to say the least, Tom. I mean, you could just sit on your hands and that's okay.
Welcome you on Apple CarPlay and Android Play as well. We'll get to that. YouTube, Bloomberg podcast. Lots going on. This morning, I haven't even seen it. You're going to see our guest list forward.
Oh, my goodness. Yeah.
On YouTube at Bloomberg Podcasts.
Oh, we're gonna
You
do
go
that?
to the show, it'll tell you who's coming up, which is really important because from the Interactive Broker Studios, who's coming up is with our Bloomberg Business Flash, Lisa Mateo.
Good morning, and a busy morning it is. Stocks right now, they are falling. NASDAQ futures, they are leading the losses. They're down more than 1%. That's following disappointing results from Meta. Those shares are down 13%, and that's after it said it would spend billions of dollars more than expected this year on AI. Now, that's pushing other tech stocks lower. We have Alphabet down 2%, Microsoft down 1%. They both report after the close, including Intel as well. Now, as far as today, we've already heard from a few companies' earnings. Merck up 1%, raise annual profit revenue forecast. Its cancer drug Keytruda, that continues to dominate. And then we have Hermes. They defy the luxury slowdown. It saw Chinese buyers snap up its high-end products. And we just saw Bristol Myers come out up 0.3% right now. First quarter, we're up with the first quarter revenue beat. Now, aside from earnings, you said it, we have US GDP. We'll also get the PCE price index, read on wholesale inventories, initial jobless claims for last week, and pending home sales. All that said, over to the bond market. The 2-year yield at 4.92%. Little change, the 10-year yield at 4.64%, and that is little change. That is your Bloomberg Business Flash. Tom and Paul.
Lisa thinks so. Oh, blue button. It's a Detroit Lions button. We're doing the NFL draft in the 9 o'clock hour.
Big. Yep.
Michael Barr, I think, is going to join. We're
Okay,
going to
good.
heavy focus on the Detroit Lions. They need 3/4. We got rid of Zach. The Jets, like Zach,
traded him away.
to Denver.
Yeah, gone. But the Zach years are over for the Jets.
We'll do that in the 9 o'clock hour. Right now, we're going to readjust to your courage to be in the equity market. Benjamin Laidler joins us with eToro, and he wants to talk about the market plumbing. What do the internals look like right now, Ben Laidler? Can you stay in the market when you look at the internal dynamics?
Absolutely. And, take a step back. I think there's an awful lot of people that would welcome this pullback. I think it's overdue. You normally see 3 pullbacks a year. This is our first. Your average intra-year drawdown is 14%. We're not even close to that. And I think a lot of people have been left on the sidelines by this sort of remorseless 25% rally we saw from October until a few weeks ago. So I think this relative resilience comes from that. And I think the technicals are clearly important. But I think the fundamentals are even more important.
We had a number of people, Ben Laidler, who have said, look, you got to buy quality. You got to stay with these big stocks. Huge day with Google, with Microsoft as well. What do you do at the margin if you own these successful growth giants?
Yeah, so the Magnificent Seven and the big tech stocks continue to do the sort of heavy lifting. It's 30% of the index. They're driving earnings up something like 40%, this quarter. Everybody else is basically flat. But, that's the history. I think increasingly from here, though, the opportunity is everywhere else. Big tech is on high valuations and, has fantastic profit margins and is delivering on the earnings. But I think the focus here increasingly it's going to be everybody else. That's where valuations are lower. That's where the sensitivity is to the rate cuts and stronger economy, especially in the rest of the world. So I think big tech's fine, but at the margin, I would be looking to rotate into the more cyclical sectors and the cheaper bits of the world.
All right, Ben, I'm just looking, my head is spinning here this morning at 7 a.m. All these companies reporting earnings, Comcast, American Airlines, both better than expected here. What sectors do you think folks should look at here as we kind of get through our earnings cycle here? What sectors do you think maybe outside of the big tech sector might be someplace worth looking?
So the classic cyclicals, financials, which I think do better as, ultimately, interest rates come down. I think the market's told us it's more worried about the impact of high interest rates on their businesses and loan loss provisions rather than it is on net interest margins. So financials is the classic and it's the biggest one. Second biggest sector in the US, biggest in Europe, where it's even more dramatically cheaper than it is in the US. So that's probably the biggest one. But I think industrials is another great one, and just more broadly, the other bits of the world, like emerging markets, like Europe, which are full of these more cyclical sectors that don't have the big tech sectors that have already done very well, and where I think the sort of incremental rotation comes from here.
Hey Ben, I know the UK market, UK stocks are cheaper than those in the US, and in large part because of a much lower weighting in technology in the UK. Do you think the UK market in general is more attractive, or it offers some value opportunities for investors globally?
So yes, and I think for two reasons. On the valuations, Europe and the UK should be cheaper than the US for a whole bunch of reasons, right? There's less growth, there's no tech, et cetera, et cetera. The question is just how much cheaper? That valuation discount now relative to the 10-year average is about 15 to 20 points larger. So that's one. And two, you have more catalysts coming in Europe than you do in the US. You have interest rate cuts, which are going to come over the summer. They're going to move before the Fed, A. And B, you have economies which are basically already flat on their back and which are much more interest rate sensitive. So you're going to get that accelerated earnings recovery coming out of Europe, which I think will be quicker and faster than it is going to be in the US. And it's going to come with room for valuations to move significantly higher.
Ben, it's a simple story with a 3-year view. The growth of free cash flow, indeed growth of revenue, growth of earnings, just the doing of business and businesses adapting to the cards they're dealt, that just pushes aside all the fears of the moment. Is it just that simple?
Yes, I think it is. So, we just talked about Europe, fantastic cyclical story, less good structural story. I think the US and big tech remain fantastic structural stories. We may have baked in high valuations and high earnings right now, but I think they will continue to deliver as we use, more tech, as they have these huge moats, as they have these sort of strong, balance sheets. And so, yes, I would be trimming back on big tech to look at the more economically sensitive, cheaper bits of the world. But I think the US and big tech is absolutely fine.
Ben, do we have any valuation risk in this marketplace? It feels like, as you mentioned earlier, the market's rallied pretty hard off those October lows. I'm not sure earnings growth has kept up. How's your view of valuation in this market?
So yes, there is some valuation risk. The S&P 500 is well above sort of long-term average levels. Bond yields have been rising, which of course, doesn't help. But an awful lot of this is big tech. And as I say, with the growth rates, those 40% growth rates when everyone else is doing nothing, with those profit margins which are double the rest of the S&P, 500, with all the sort of talk of, accelerated growth with AI, I think you can absolutely justify those tech valuations. Yeah. And then from there, it just gets significantly cheaper. With big oil reporting tomorrow, they're on nearly half the valuations. And, you can go on and on and on. So, an awful lot of this comes back to big tech. Everybody else is actually, valuations are very, very reasonable.
Ben Laidler, thank you so much. With eToro, a nice brief into the earnings that we'll see this morning and particularly this afternoon. A little red on the screen here right now, the VIX 16, 0.29. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Former President Trump made a Midtown campaign stop this morning, shaking hands with New York construction workers.
Have a lot of support. I hear the Teamsters, I've done a lot of work with Teamsters. I built a lot of buildings with the Teamsters, and they like me, a lot of Teamsters here. And it's an amazing show of affection.
In a couple of hours, Trump will be back before a Manhattan jury hearing more testimony in the criminal hush money trial. Bloomberg law host June Grasso has the latest from New York.
David Pecker, the former publisher of the National Enquirer, will be back on the witness stand today. On Tuesday, he told the jury about how he killed stories about Donald Trump's extramarital affairs to boost his 2016 presidential campaign. Today, prosecutors will likely ask him about the hush money payments to Stormy Daniels. The judge has not yet ruled on the prosecution's motion to hold Trump in contempt for violating the gag order on commenting on witnesses in the case. In New York, June Grasso, Bloomberg Radio.
At the same time that the U.S. Supreme Court will hear arguments over whether Donald Trump should be immune from prosecution for actions he took during his time as president. An Arizona grand jury has indicted former President Trump's chief of staff, Mark Meadows, lawyer Rudy Giuliani, and 16 others in an election interference case related to the 2020 presidential vote. Support among swing state voters for U.S. aid to Israel has plunged in the months since the country launched its campaign to root out Hamas in the Gaza Strip. According to the latest Bloomberg News Morning Consult poll, it's at 51%, down 11% from November. Secretary of State Antony Blinken raised concerns over unfair trade practices in the world's number 2 economy as he began talks in China. There's the threat of U.S. sanctions on Beijing for its support of Russia looming over his visit. And tonight begins the 2024 NFL Draft in Detroit, the Motor City. Heck yeah. Quarterback Caleb Williams will likely go to Chicago first overall. Commanders go second. Patriots a third. Lions are 29th because, well, we're good. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
We'll look at this in the 9 o'clock hour. Barr's rigged the show today, to say the least. Is there a correlation here to future success? Is a general statement, when you pick in the draft, you look at it 3 and 5 years later, do most people say we made the right decisions?
Well, sometimes you hit and miss. I mean, it's, you think you've got the quarterback, you think you got the number 1 pick, and then all of a sudden...
Then you trade him away for like a 6th rounder.
Yeah.
Like the Jets just did.
Are you talking about a Zach Wilson or somebody like that?
But Tom Brady wasn't a number 1 pick.
No.
He was a 6th rounder, quite frankly.
6th rounder,
exactly. Isn't that amazing? Yeah. So
okay.
He's a crapshoot. I mean, I don't know how they do it.
6th rounder, Tom Brady.
Yeah, exactly.
That's just why.
I know.
Because somebody got hurt. That's it.
Yeah.
and he stepped in, and the rest is history.
Michael Barr, seriously, is it like Moneyball, that scene with the Oakland A's, where it's a bunch of old guys sitting around a table, and they had a few beverages last night, and they're trying to pick baseball players? Is that all this is down to?
Campus Martians is going to be busy in the Hart Plaza area in Detroit tonight because of what you just said.
Lisa, have you seen Michael Barr this happy?
No.
The Lions picked 29th. The Lions picked 29th.
29th. I think the Bills are just before that, 28th.
Giants, I noticed, are a little bit higher.
Yeah, they're 6th. Yeah, Jets 10th.
Okay.
10.
Well, it'll be something to look at. You got Google, you got Microsoft, then you got Michael Barr in the NFL. We'll have team coverage tonight. From New York City, Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures falling with the NASDAQ leading the losses. NASDAQ futures down more than 1%. Dow futures down 0.5%. S&P futures down 0.6%. The 2-year yield at 4.92%. That's little change. The 10-year yield at 4.65%. And that is little change. To commodities, we have spot gold higher at $2,329 an ounce. Brent crude, $88 a barrel. NYMEX crude, $82 a barrel. To earnings we go. A lot to get to. Comcast up nearly 1%, reported adjusted earnings per share for the first quarter that beat estimates. American Airlines up 4%, reported operating revenue for the first quarter. It met estimates. But then you have Southwest. They're down 8%, reported a wider adjusted loss per share. It also said it's slowing growth. It's ending service at 4 airports, offering voluntary leave, and that because Boeing reduced the number of aircraft that it's supposed to get this year. And then on a side note, Southwest flight attendants, they have approved a new 4-year labor deal worth around $6 billion. That is your Bloomberg Business Flash. Tom and Paul.
Lots going on here in equities, bonds, currencies, commodities. Lisa Mateo, thank you so much. We're a little bit distracted here this morning, and I think, Paul, that the way, I don't want to get too emotional here, but the way I look at it is like Microsoft, Google. It's important. But probably where Graham Barton goes is probably when you look at it versus Drake May at UNC.
Yep. I know.
Drake May could go first-round draft pick. Veronica Clark went first-round draft pick.
Yeah.
Citigroup.
The city picked her up.
Jane picked up the phone and called up economics and said, get the first-rounder from UNC.
I know. She's one of our faves. Veronica Clark joins us, economist at Citi. Veronica, we're going to get a GDP print here today. What's your view? Just stepping back, what's your view of this U.S. economy balancing growth in GDP versus this inflation that seems to be hanging around?
Yeah, I think the resilience of activity really has surprised everyone, us included, of course. People were looking for a recession last year, us included, and it really has not come yet. And I think we'll still see a pretty healthy read on Q1 GDP this morning, softer than the last 2 quarters. We're expecting 2.0% growth. I think consensus is around 2.5%.
That's right.
But we've definitely seen the stickiness to inflation too, which that contrast, it does make it hard for the Fed to be cutting. And if you think this is a restrictive level of rates, you are risking that growth story if you leave rates here.
You're burying the punchline. You guys nailed this. I give Jim Bianco massive credit for saying the disinflation vector is suspect, like it's in place but it's not. But you and Andrew Hollenhorst were way out front of major bank houses of saying everybody just quiet down. The last mile of disinflation is challenging. What's the quality of the first look of GDP versus the third look of GDP?
Yeah.
Do they shift?
Yeah, things can change a lot. This morning we'll get data that's based on a couple months of data that we have, retail sales. But by the time we get that third release in a couple months, we'll have a lot better data on services spending. So things can shift a lot, but they haven't shifted too much in the last couple quarters. It's still been pretty strong.
Really?
Yeah. If anything, we've had some upward revisions to the past quarters of GDP.
Do you pray to the altar of Atlanta GDP now?
It has gotten very good. It has been very good recently.
It's not like ADP. ADP and unemployment. And
yeah.
The jobs report. You're like,
Those are very different. Atlanta Fed GDP now, especially in the last year or so, it's gotten very good at forecasting GDP. I believe they're at 2.7 this morning.
Yep, they are exactly right. So let's talk about. We're also going to get jobless claims today. Again, seems like just another month of a $220,000 print here. Mm-hmm. What's your view of this labor market? It seems the resilience of this U.S. labor market, to me, is striking.
It's a bit complicated. We're getting actually a lot of mixed data on the labor market. Certainly, initial claims are a very important one to watch. If we started to see those tick up, that's telling us we're getting more layoffs, and they've been very low. We haven't seen that yet. Headline payroll job growth is very strong. We'll get that next Friday. But a lot of the other labor market data don't look as good. We've seen the hiring rate falling. Even earlier this week, the PMI services employment subcomponent, that fell pretty steeply. So we are seeing these signs that hiring demand for workers is slowing down. We don't see the big layoffs yet.
Paul Sweeney nails the two emotions, growthiness and all that. We get tons of mail. You guys are nuts. There's no growthiness.
Yep.
And also the inflation worries, the inflation worries that are tangible. Bring them together. Have we lost the real wage? Are we heading towards negative inflation-adjusted wage growth?
Yeah, I mean, we definitely have this stickiness to inflation still, and we would be worried about the labor market loosening, which should mean that nominal wages are slowing. Now, in that kind of environment, you would expect that inflation is also going to be slowing. If the labor market is loosening and wage growth is coming down, inflation should be coming down too. Normally, we do run positive real wage growth, but yeah, there is some weakness under the surface there for the labor market.
I think this is a huge deal. I mean, you get negative wage growth on an aggregate basis.
Oh, yeah.
And the emotion changes, particularly the election.
Do we have negative wage growth here? I
No.
don't know. We don't?
Not
Okay,
yet.
very good.
No.
Okay, I'm
I
talking about Bloomberg.
I give Neil Dutta. You mean a chart? Yeah, it's there somewhere.
Okay.
Lisa's in charge of that.
Veronica, talk to us about the consumer here. The consumer seems, by and large, pretty resilient, but I know there are definitely some challenges out there for the consumer.
Yeah. The main thing is that the labor market is healthy. If people have a job, they're going to be spending. That's the real driver of spending right now. But we will probably see this morning that goods spending fell in Q1. That kind of trend does tend to lead trends in services. We did have very strong retail sales, of course, for the month of March, so maybe there is a bit more resilience there. But delinquencies have risen, savings rates are very low, and so you would be worried about consumption slowing more if that labor market story changes.
Royal Caribbean, which I know Tom's a big cruiser,
It's a Dow
rises
component.
as strong demand spurs forecast hike. I mean, people are still spending out there, aren't they?
I think something like cruises is a relatively inelastic spend also, I've gathered. There is still a lot of strength in these services spending, but if we dig into the details, even in services, a lot of that strength is coming from sectors like healthcare. There's a lot of healthcare spending, and we have seen like restaurants actually slowing a bit in Q1.
Here's the real
Not
world,
for me,
folks.
they're not.
This is the Bloomberg terminal in the world of Veronica Clark and what we do. Paul goes, do we have real wage? And we have a search engine to die for. And I bring it up and I draw a horizontal line at 0%. And I just sent the chart to Paul, like I send to any client, any customer of Bloomberg Worldwide, and boom, there's 40 years of real wage. Thank you, I guess, St. Louis Fed, who's ever adding this up as well. I look at this economy, and let's go back to the Citigroup victory lap, which is yields are going to be a lot higher than the disinflation crew. Is there a disinflation vector in place, X, say real estate, X OER, or you just capitulated on that and said, no, there's no disinflation vector in place?
Yeah. Shelter is one. Everyone's been expecting this slowing. That's just taking a long time to happen for shelter inflation. I mean, we did see the disinflation in goods in the second half of last year, and that story has kind of slowed, although it still looks like there's weakness for things like car prices. So maybe we see it there. And ultimately, what will cause the disinflation, I think, is if you do loosen the labor market more, you weaken the labor market.
But we haven't. This is the claims, 8:30 this morning. Folks, I mean, I take the 4-week moving average of claims. What's that tell you?
Very steady. They're right around 212 is where we've
Is it
been for
an
a while.
immigrant impulse?
It's so that might be some of the story. I think so. And maybe not in the official measured data. It's very hard to measure something like that. Maybe there is some loosening from that, but I don't think it can explain all of the strength in payrolls, for instance.
Okay. Who would you like to see Derek May go to? I mean, this is a stud from you.
You are now out of my realm of expertise.
If he goes to the Giants or Jets, you can do a road trip out there.
That would be great. Yeah, I would like to see a UNC player.
Did you go to UNC basketball games?
I did, of course.
Okay.
Yes.
The Dean Dome.
It scarred her for life.
Yeah.
It's a good.
I went
race,
to
right?
I was at the Duke game with the Austin Rivers buzzer beater.
Oh, very good. Okay.
Very sad. It was very
She's
sad.
got a tattoo to show that. Veronica Clark, thank you so much with Citigroup.
Thank you.
And with Chapel Hill, I should say, as well. Futures deteriorate negative. Futures are negative 33.
Yeah.
Is it just Facebook?
Yeah, exactly. I mean,
I don't really know.
I mean, Facebook, the story was, Tom, over the last 18 months that's driven that stock higher has been cost cutting. Now they're saying, we're going to spend some more on AI, and that's just not what investors want to do.
One of the high points yesterday, Anurag Rana, Mandeep Singh with us on technology. Rana, he had a tantrum. He says, it's like there's a time shift to Chicago.
Yeah.
Can't do it today.
No.
We've got Mandeep solo.
Okay, good. All right,
That'll be
very
good. We're going to lots to talk to Mandeep Singh about on Facebook, on Google, and of course, this huge announcement. For me, it's what I'm looking at more than anything, Microsoft, to say the least, I should say. How about this? The real yield, 2.24%.
Wow.
Veronica Clark has to go rewrite the Citigroup research. From New York City, Bloomberg Surveillance.
Bloomberg Surveillance is brought to you by BNY Mellon Insight, June 4th to the 6th in Nashville, Tennessee. Don't miss the essential event for the financial advice community. Visit insight.bnymellon.com.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks are falling. Then we have the Nasdaq leading the losses. They're down more. It's down more than 1% right now. That's following disappointing results from Meta. Meta shares down 14% right now. After the bell, it's all about Alphabet, Microsoft. So we continue with tech. We'll also hear from Intel, Snap, T-Mobile later this afternoon. This morning, we've already heard from more earnings coming in. Royal Caribbean, they're up 3%. More people are cruising. Boosted full-year profit forecasts, sparked record price hikes. And you have machinery maker Caterpillar. It reported first quarter earnings that beat expectation. But here's the thing. It said it expects sales for the second quarter of 2024 to be lower. That's why their shares are lower, down 3%. And Harley-Davidson, up more than 1%. First quarter revenue beat estimates on strong North American sales. That is your Bloomberg Business Flash. Tom and Paul.
Worst day of the year. Today, we welcome all of you across this nation to the torture of Take Your Children to Work Day. It's a national thing. We do it big time.
We do it big time.
Mike
a lot of
Bloomberg
the
believes in it.
Yep.
We do national, Take Your Children to Work.
Yep.
And here's the problem. It's lovely. The cherubs show up, and there's, somebody's walking around looking like Elsa and Frozen, and it's all cute. And then they get older. And our global technical director is an example. He's got Ron and some other slug, Michael, and they're twins. And twins is a burden. Let's be honest about it.
It's tough.
And they used to come in, and they were
they
were so damn cute. I tried to steal one of them once, just take them home. And now they're like, they got the cell phone, and they're like, whatever, Dad. And can I go sleep under Lisa's desk? And it's like torture. It's painful, Paul.
Yeah. Plus, Ken doesn't do the 9 to 5 thing either. He's in a little early.
Yeah, it's like, well, the kids are tough, But we say good morning to all of you with the courage to take your children to work day. I looked at Afterthought this morning. She said, take vet bill and kennel fee. And I almost brought the dogs in.
We got to work.
Well, Lisa brought her
My son came yesterday.
Your son came yesterday.
He did. He had a nice time.
Army National Guard.
We should say young Mateo.
Got the tour.
Is doing public service to this
nation. Yes, we thank him for his service.
Which is very good. Good morning to all in the U.S. Army. We say good morning to someone else fighting a battle. Jeffrey Hirsch is with us. CEO. To say he's with Hirsch Holdings is baloney. He is the Stock Trader's Almanac, and I will make it as clear as I can. You pick it up, you turn up page, and there's common sense and wisdom. Jeff Hirsch, which is the most important page right now in the Stock Trader's Almanac?
Oh, it's the best 6-month switching strategy. We had our sell signal April 2nd. So, it's the main seasonal moves is what it is. I think it's page 54, if memory serves.
Yeah, it was page 54, say sell in May and go away?
We don't go away. We reposition. We saw some things. We had the Dow and the S&P have their best 6 months, November to April. NASDAQ goes to June, best 8 months. Tech definitely taking it on the chin right now, but what?
I'm looking, Paul, we're on YouTube. Good morning on YouTube. I think Jeff Hirsch is coming to us from a bar. He closed the place down. He closed the place down.
No, I'm with my son. We're looking at schools down in New Orleans. So I'm at the Hotel
Very
Pompano.
Cool. Very good. Go Tulane.
Down in the lobby.
Go Tulane.
Yeah, we're going to Tulane on Monday. We went to Loyola. He's in the music industry
cool.
vibe. So yeah.
Can you imagine?
So we're gonna do some Jazz Fest too.
Can you go to? Can you imagine school in New Orleans?
No, I could not. For me,
Bremer went to school down there.
No. Really?
Yeah, that's how he got twisted.
Okay, very good. Hey, Jeff, what do we do? This is an election year. What does that mean for stock markets, generally speaking?
Well, I mean, the last 7 months of election years, there's only been down twice, 2000 to 2008. So this dip, I ran a study using election years with the Q1 up really big. And after that, you see this April-May sell-off, which is, April is usually the best month of the year. So it's a little bit concerning when you have April being down like this. But after we get through Memorial Day and into June, the election years look strong. I mean, with the sitting president running, it's 12.8% in the S&P. and you see some of the charts I put out there on Twitter feed or wherever. We're in that corrective phase. We were looking for about 3 to 6%. During the worst 6 months here, some chop through convention time and into Q3. But generally, we rally in the fourth quarter. And what we're seeing now with this big Q1 and the correction in April is a lot of chop for the next couple of quarters, next several months. You never know exactly where that bottom is. I'm looking at 4,800 as a level on the S&P as some support, where the old 2022 highs were, and where that gap up in January was when we sort of broke out a little bit. But right now, I'm not expecting a whole lot. I mean, you were selling about going away. We don't go away. We reposition. We're in utilities and, some bonds, and we're just not doing new buying and tightening up stops and getting rid of losers and just sort of repositioning during this sort of cautious phase between the end of the best 6 months for Dow and S&P and end of the best 8 for NASDAQ.
So, Jeff, I mean, are you one of those folks that feels like we need to see improved breadth in the market as opposed to what some folks are calling the Magnificent Seven or however many names are in there today? Do we need to see better breadth, or do you not care?
It doesn't hurt. No, we care. You always have leaders. There's been periods throughout the market's history. We've got handfuls or, the Nifty 50, whatever you want to reference, that you've got, a smaller group of stocks leading things. But, we don't just look at breadth. We look at new highs and new lows. I mean, we've been running the weekly. If you look at the back of your almanac there, Tom and Paul, you can see the weekly indicator record keeper. I mean, it's sort of gives you a framework for what to do, but we track that in the newsletter and all the time. The weekly stuff out of Barron's, the lab pages, and it's been concerning. We've also, just seen, the sentiment up really high. That can stay there for a while, but yeah, it'd be helpful if we had. Go ahead.
With the heritage, Jeff, of your family, in the decades you've been doing this, is there too much market timing, market guessing going on right now?
I mean, for individuals, there always is. There's too much information, period. I mean, there's too much. There's a million newsletters out there. There's a lot of trying to time everything back and forth.
Yeah.
So yeah, but I think timing is important. Timing is critical, especially in our business. But you have to time it right. You have to use things that make sense. I think people use too many tools. A couple of different indicators like seasonality and MACD works great for us. But you start throwing too many things in there and you confuse things. But there's also a period of time where you can just leave the bat in your shoulder and wait for the fatter pitch. And I think that's where we're at right now. There's no need to always have to be trading. So more so, too much timing is too much trading. Too much always got to be buying something.
Are Microsoft and Google part of the fattest pitch?
They're not yet. I mean, we had the fat pitch in October. I think we wait for a fatter pitch. Supermicro's looking attractive again down. That's one of our picks. So I know that's not one of the 7, but I think you can be patient here. I think you can be patient here. I don't think there's a big rush. I think we're going to have some opportunities, especially with the news flow, whether it's coming out of the U.S. political scene or the international geopolitical scene or the Fed. And earnings. There's plenty of things to keep this market jittery for several months. And I think we need to be patient.
Jeff, something new for you versus, in past years with your father would be ETFs. How do you play ETFs these days?
A lot. I love. We use them. I mean, back in the day, it was when the mutual funds came in. Yep. I think you see, a lot more churn and chop, and there's definitely some manipulation that goes on with always trying to move things through these new products. But it's a great vehicle for individual investors. I think it's a boon, for individuals to get into. I mean, we trade commodities too, and I prefer to trade ETFs because I'm not really that into all the contango and all the different contracts. I think it gives individuals and brokers, advisors, whatever, some great vehicles to invest in different sectors of the market, different classes.
I get tons of requests from people who say, Tom, I'm a newbie. What book should I read? Stock Trader's Almanac is not a book, but it is just page after page of common sense. It's been identified with the Hirsch family since time began, and Jeff Hirsch carries the flag forward. Jeffrey, thank you so much. Hirsch Holdings from New Orleans, from a bar. It's great.
That's how apropos is that?
I love it. That's either that or it's a hell of a hotel suite.
Right.
Jeff Hirsch, thank you so much. Futures negative 38, Dow futures negative 230. The VIX relatively quiet at 16.33. Yen is in the news. I'll tell you, Euro yen is something.
Yep.
Popping to 167 about 5 hours ago. That'll be front and center for us tomorrow. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Former President Donald Trump did some campaigning this morning in Manhattan. He greeted construction workers on a Midtown street and spoke to reporters.
We're leading in the country by a lot. Poll just came out a little while ago, as you saw yesterday, that we're up in every swing state and up by a lot in every swing state. So I think we're going to do very well.
Later this morning, Donald Trump will be back in a New York City courtroom as his hush money trial continues. Former National Enquirer publisher David Pecker will return to the witness stand for more testimony. Meanwhile, Donald Trump continues to insist that he is immune from being criminally prosecuted for trying to overturn the 2020 election. And now the U.S. Supreme Court will hear arguments today as they consider exactly what constitutes a presidential act. Bloomberg's Amy Morris reports from Washington.
Donald Trump argues the charges are all based on actions he took in his official capacity as president. Prosecutors say nothing that Trump did in trying to remain in power despite his loss was conduct of the office. The justices have to try to draw a line between these views. There's not much guidance. An official act of the presidency isn't a term rooted in the Constitution nor criminal statute. And even if Donald Trump is entitled to some immunity for official acts, the federal government maintains there's no basis for his claim for immunity. Meanwhile, the clock is ticking, giving special counsel Jack Smith only a narrow window to put the former president in front of a jury before voters go to the polls November 5th. In Washington, Amy Morris, Bloomberg Radio.
An Arizona grand jury indicted 18 people for their alleged roles in an effort to overturn the results of the 2020 presidential election in the state. Several of the former president's close associates, including his former attorney, Rudy Giuliani, and Donald Trump's former chief of staff, Mark Meadows, were indicted. The defendants include 11 people who were allegedly involved in a so-called fake elector scheme, in which they signed a document falsely claiming that Trump won Arizona. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
14 months ago, Cork Gaines does the heavy lifting in Business Insider. Quote, in particular, the Patriots loved Brady's mental makeup and leadership skills. Paul, it sounds like every job description. Yeah. I mean, all the draft is down to is trying to figure out if these kids have their heads screwed on.
It seems like.
I mean forget about what they do in the 50-yard dash.
It seems like the interviews that the teams have with these, particularly the quarterbacks, the interviews, sitting down and talking with them, those are big determinants on whether teams take a player or not.
Yeah, there's a lot of grilling when it comes down to the QB position. When you're behind the center, there's gonna be almost like an SAT test.
Yeah.
With some.
Well, here's my theory. The NFL has to dumb down the QB position because the success percentage of college QBs coming to the NFL is so minuscule versus every other position that they've made it too difficult for a good college quarterback to be a good pro quarterback. Rich, what do you think of that theory? Yeah,
thank God we don't have a camera in the control room today. I know. Take your children to work. They're like snoozing until 10 a.m. Molly Smith is going to walk in and do the show with Paul and Michael. They're like.
And we talk tennis. We talk tennis for 2 hours.
Have you guys listened to Taylor's new album, Michael? Have you listened to Taylor's new album? No. Rainier? I'm shocked.
Rainier is definitely
these guys, I mean, who brings metalheads to take your children to work? I mean, my God, they're listening to Mattel. They're listening to POD with Carlos Santana like years ago. It's embarrassing. Lisa, did you bring your children to work?
No, today.
Can you imagine Barr bringing his children to work?
No, they're looking for cool in the gang.
That would be correct. My children, Mike said never again. From New York City, it is Bloomberg Surveillance.
headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures pointing to a lower open. NASDAQ futures down nearly 1%. Dow futures down 0.5%. S&P futures down 0.6%. The 2-year yield at 4.93%. That's little change. The 10-year yield at 4.65%. And that is little changed. Over to commodity. Spot gold higher at $2,329 an ounce. We have Brent crude at $88 a barrel. To earnings, IBM, we'll start there. They're down 8%. The company's weak consulting unit, well, that overshadowed its acquisition of software firm HashiCorp, and its big bank earnings season in Europe. British bank Barclays up 5% in London, posted first quarter revenue, topped estimates, and Deutsche Bank, too, up 3% in Germany. 7% jump in earnings from fixed income trading in the first quarter. That's your Bloomberg Business Flash. Tom and
In
Paul.
the blur, I knew this. Can we have a moment of silence for David Harrow of Chicago, who stuck with the European banks for years, including a lot of agony at Credit Suisse.
Really? Okay.
And the European banks are finally, they don't have negative interest rates anymore.
Yeah, exactly.
That's all there is to it.
Net interest income, finally.
And Mr. Saving, I was in Davos. This is just to give you a little vignette. And I'm at the espresso bar because that's where I live. And, I'm hanging out, talking to muckety mucks and the great and worthy. Torsten Slack comes up to me.
Torsten Slack.
Tom, do you have time to meet someone? And I'm like, yeah, I figure it's, some kid from Deutsche Bank who hangs on every word of the show. Thank you so much for listening across continental Europe. He brings up Mr. Saving, who wanted to meet me. And that was a real honor. And this is about the character of Tom Brady.
Yep.
They blew up Deutsche Bank, and they went with a guy who was retail Germany, totally unassuming, low-key, and look what Saving has done with Deutsche Bank, trying to turn
that around.
That juggernaut around. Why do we? I mean, it's take your children to work week, and today I should say. So let's get right to it.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
Your daily look at the front pages, and because children are in the building, they're appropriate stories today. From Lisa Mateo, it's brought to you by Interactive Brokers. Interactive Brokers, they charge dollar margin loan rates from 5.83% to 6.83% rates, subject to change. Learn more at ibkr.com/compare. Lisa, what do you got?
All right, yes, we're keeping it PG for the kids today. Okay, so we've heard a lot about a lot of workers being afraid that AI is going to take over their jobs. That's a big thing. But we had one IT company who's telling the Financial Times that technology could do away with call centers. You have a lot of the call centers. This is the head of Tata Consultancy Services, said AI is going to result in, they definitely know, especially over in India. Quote, minimal need for call centers as soon as this year, as soon as a year. And so it's going to show that it's going to have a vast industry across Asia and beyond.
But you know how they shove you to chat? You do chat, and there's no person on the other end. It's just a computer algorithm. It doesn't work. That's my sophisticated analysis.
It's frustrating. You're sitting there, you're like, representative. Like, I just want to talk to a person.
Why is this going to work?
Well, they're saying that what's going to happen is that the chatbots are going to be able to analyze the customer's transaction history and do much of the work that are done by those call center agents. So they're saying they're not going to need them.
I need some new Tang Zero right now. I love sending a message into our control room telling Michael, the lazy puke, sleeping right now because it's take your children to work week. Go get me a coffee and a Tang Zero. It's about time we put these kids to work. What's next?
So we're talking about kids. We're talking about girls. I love this. It's a girl power story. Sorry, here we go. Okay, the Queen's Park Ladies. It's an under-12 soccer team in England. They are undefeated. They're playing in a boys' soccer league. Nice. Okay, so they're kicking butt. They're hoping to inspire younger girls to get into the sport. They've won all 22 matches. And at first, the boys were laughing, when they saw these girls come out. And who's got the last laugh
You know who's behind this? You know who's behind this?
Who?
Mohammed El Arian.
Oh,
I have told, we were out having a beverage in London, me and John Farrow and Dr. El Arian. And we're, the two of us, we're trying to get him to pick up the tab. And we're saying, Doctor, he did pretty well in the investment business, folks. And we said, Mohammed, would you just buy QPR? And he's trying to decide, should he buy QPR, which is in the Champions League, or should he go big?
Yeah.
like to leave, buy Arsenal or whatever. But the QPR ladies are getting it done.
They are.
The under 12, very cool.
Yeah, but
Good morning,
that was
Mohammed.
really cool. Yeah. And the reason they did is because when they first started years ago, there wasn't a girls' league.
Yeah.
So they didn't have the competition. So that's why they joined the boys.
They didn't have a girls' league?
It was about 6 years ago when the club
interesting.
started. Yeah, and they didn't have a girls' league back then. So.
Well, girls' sports here. I mean, your
Girls' sports here are
daughter's huge.
Yeah,
into
girls' sports here
softball
are
and stuff.
really big.
Yeah.
I know when I was younger, I was an
you're
athlete.
burying
I
it.
played with the boys on the basketball team.
Did you?
They didn't have
Ah,
middle
Okay,
school
no,
girls.
stop.
Okay.
How many D1 schools are going to recruit your daughter? She's
Zero.
like huge. No, she's like
She'll go
huge. right?
D2, D3.
Okay.
D1 is tough. D1 is tough.
Yeah,
But
that's
and it's a
lots of
big
good-
workload with the school and the D1 schedule.
She hit a
It's
ball
huge.
the other night, which landed in Staten Island.
She
I mean,
did another homer. She did.
okay.
I'm telling you, girl
Next.
power, love it.
Girl power.
So since we're talking about kids, a new report says U.S. birth rates actually fell last year to the lowest level in more than 40 years. So this is from the U.S. National Center of Health Statistics. It fell 2%, 3.59 million. Not just the U.S., birth rates in other countries worldwide. And we all know why. The experts are saying, paid family leave, skyrocketing healthcare, childcare costs, it's all the same. But peak birth rates shifted to women in their 30s and 40s. Those rates declined in 2023 from the year earlier.
So my four offspring, that's an
You are a
unusual.
rare
I'm
case.
rare, okay. It's just being
People
Irish
are not
Catholic is,
having
I think,
4
what's going
children
on there.
anymore.
I think it's the
Hopefully
one
do.
thing. The one thing
It's
I
the
learned
money.
in the pandemic, other than listen to the medical pros. Thank you, all the people that saved us at Moderna and Pfizer as well. The number one thing I learned is we lived all the evidence that our child care system is broken.
Yeah.
We all lived it.
We did.
Everyone.
Yeah, the child care is crazy. I mean, Matt Miller during this time came back from Germany where they have paid child care, and
Yeah.
it just and his wife
Oh,
was
yeah.
just shocked
Oh, yeah.
that we don't have that here in the U.S. She said, "Wait, this is the United States. You guys don't have paid health care, so
Kinda
women can
way
go to work
behind.
and do all that kind of stuff." And then during the pandemic, of course,
It's a
Right.
it
huge,
became that much more.
huge deal.
Yeah.
Huge deal. Are you done, or is there one more?
No, this one's for you. Now, I know you like your Doc Martens, Tom.
I do.
But this is a new thing you may have to switch to, okay? It is a snowfer or a sneefer.
I saw this.
Okay, it is a cross between a sneaker and a loafer. All right, so New Balance is coming out with it. It's in August. It's kind of looks like a sneaker. It has a grayed out mesh, but it has no laces. So they're hoping that this is different from, the slip-on shoes, different from that. This is more high-end, so they're hoping
Yeah, I'm
it'll
not
go
going
to the
there.
executive. You're not going to wear it.
Here's where I got really disappointed. One of my all-time favorite people who I look up to, David Weston.
David Weston
always
wears
dressed
sneakers.
to the nines. He is now with his wonderfully tailored suits coming in. I mean, he's a player
He is.
wearing these kind of sneak things
He
with
wears
his
the
suits.
sneakers.
And if David Weston can go casual,
Michael McKee
the
does
world's
it too.
coming to it. Michael McKee again, another one.
I'm
I'm
rebelling.
just
You
not
can't
going
do
there.
it?
Do you know in the hallway at the front door where Mrs. Keene says, "Shut up and throw this out," she has my last pair of decent Bauer skates. Like they're just below like what the NHL people wear, and I think they're going. I'm not putting those on again. I don't think so. But are you going to
Central
get me in old fart sneakers without laces?
We're
I'm
getting
with
you
Paul
the
on this.
snowfers.
Yeah.
I may have to hire somebody to. Michael Rainier, do you want to come over and tie my shoelaces? It'll be great.
That's true. You don't have to tie the laces. You just slip them on.
Surveillance correction right now. We do make mistakes, and we always correct. We had that puke Michael sleeping.
Yep.
Take your children today.
Well, I
we
would,
were
yeah.
wrong. Rainier was like comatose. She was in there.
That's what happens.
Well,
Well, they got in here before the crack of dawn.
I mean, they're troopers. Most of the kids slide in at 8:15 or that.
Yep.
But when you're the global, when you're global technical director, you got to get in early.
Yeah,
And that's what
exactly.
But there's going to be a lot of kids coming through here today.
and we should
And they
say
have it structured very nicely, actually.
to Beth Mazzio and all of our senior management, this thing was nothing like 20 years ago. And some of my cherubs actually came to work
Yeah.
and were like, right bored. We're doing Australia. There's a mining deal out there for Broken Hill Properties. Australia, for Qantas, who lives in Perth. If you start Australia, you got to start with Rick. Recorded in Los Angeles, Rick Springfield.
Girl, and I wanna make her mine. and she's watching him with those eyes, and she's loving with that body, I just know it. And he's holding her in his arms late at night. You know, I wish that I had Jesse's girl. I wish that I had Jesse's girl. Where can I find a woman like that?
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Now we're overwhelmed, everyone. I don't know what to say. Mandeep Singh just walked in. We're going to get to Google, Microsoft, and look back at Facebook and all that. Lisa's loaded up with the news. None of it matters. Here's the real world. The global technical director gets in at 3 a.m., drags in the sleepy older children. They were sleeping coming into the building. They're back asleep. Lanzone shows up. All of the stuff that we put together that's like messaging and ad and branding and that is treasured. The only problem with Lanzone is he's a Yankees fan. I don't know how that happened in the resuming. He gets in with Abby at the crack of 7:58 a.m.
No need to rush.
I mean, he's not. I mean, this is the way take your children to work day is. I mean, real troopers like Felia are here.
Yep.
It's painful to say the least. We say good morning, a hugely busy Thursday. We'll get to what you care about with Mandeep Singh here in a moment. Bloomberg surveillance this morning, always brought to you by Cohn-Resnick Advisory, Assurance Tax, Cohn-Resnick's enterprise risk management solutions that can help your company drive value through stronger compliance and reporting procedures. Visit Cohn-Resnick.com. We're going to get right to it. You know about Apple CarPlay, YouTube. Our list of guests, including Mandeep Singh now, is on our YouTube page. It's a new enhancement, as they say.
Okay.
Our best enhancement is Lisa Mateo right now with The Flash.
Thank you very much. And stocks are falling this morning on Wall Street with the NASDAQ futures leading the losses. They're down nearly 1%. We have S&P futures down 0.6%, Dow futures down 0.5% as well. And this is following disappointing results from Meta. Meta shares down 14% right now. That's pushing other tech stocks lower. We have Alphabet down 2%, Microsoft down 1%. They both report after the close, and those stakes are going to be high because they're two of the biggest AI players releasing results. Now, as far as today, we've already heard from Merck. Merck down 2%, raised annual profit and revenue forecast. Its cancer drug Keytruda that continues to dominate. Then you have Bristol Myers up 0.3%. First quarter revenue beat there. And some big news in mining. Shares of BHP, the world's largest mining company, their ADR is down nearly 3%. The company proposed a takeover of Anglo American, and that values that smaller miner almost $39 billion. Their ADR is up 3%. That is your Bloomberg Business Flash. Tom and Paul.
We're going to dive into Broken Hill Property and the Oppenheimer Mining Company. We'll do that here in the 9 o'clock hour as well. I'm going to get this out of the way, Paul, because I know you're totally pumped on Microsoft and Google. Mandeep Singh with us right now. Mandeep, I looked at the numbers on Facebook. I don't care about the forward. Can I just start with the idea they're minting money?
Yes, and it's one of the most profitable business models. I mean, along with Google search, this is the model for, incremental margins of north of 90%.
And that doesn't matter.
Because what they said on the call is they are raising their CapEx without curtailing anything on the Reality Lab side. And that's the part that's losing $4 billion a quarter.
Wait, is Reality Labs iThings?
Yes, those are your AR, VR glasses.
Okay, it's tanking at Apple. Do we think it's tanking at Facebook?
I mean, they wrote down a bunch of inventory. So last night when they reported Reality Labs, included in that loss was inventory write-down. And so that tells you something that the demand is not there. There is no path to monetizing Reality Labs engagement. They're selling the hardware at almost a negligible gross margin. And that's why, the fact that they raised the CapEx without offsetting anything on the Reality Labs takes you back to the 2022 days where, we're going to raise our CapEx and OpEx and our revenue growth is going to be low single digit. That's not the case here. They're actually doing remarkably well on the core business engagement. If there's a TikTok ban, it may actually help Meta's engagement. But still.
Paul, I'm just looking at the CFA numbers, the ratios. It's a money machine.
It's unbelievable, Tom. I'm just looking at the FA screen for Meta here. They're going to have mid-teens revenue growth, 160 billion of revenue this year, EBITDA margins of 56%. EBITDA, free cash flow,
Folks,
46
all
billion.
you need to know, that's like a drug cartel and you name the country.
Exactly, It's extraordinary. It feels like the stock a little bit oversold here, down. I was surprised to see it in the aftermarket yesterday, down 15 to 20%. But I guess it just spooked investors because what has worked for the stock has been this cost-cutting mindset of Mr. Zuckerberg and the management team. And now maybe that story is losing some of its momentum. Is that kind of what's driving the stock here?
I mean, look at the operating margin expansion. It went from 23% to 39%. So in just a year, because of the cost cutting and the efficiency. And that puts into question, if their revenue is growing mid to high teens, why doesn't it trickle down to share buybacks and, better capital allocation? Why will their margins be flat? And the reasons they'll be flat, because they are spending more on AI, which I think is good spend. It's the Reality Lab spend that's sticking out and without any markers.
All right, so I don't even know what Reality Labs is versus Metaverse. Are those two separate things?
Yes. So look, I think Reality Labs does include an element of augmented reality. So they have a partnership with Ray-Ban, which they called out last night that the Ray-Ban glasses are doing very well. And I believe so. I think it's a new category that they can curate in addition to VR, where they have a competition with Apple. The problem is, how are you going to monetize that engagement? You can't show ads on AR glasses or VR. So there's no...
See?
It's just a hardware sale.
This is where I draw the line. I see no evidence whatsoever that goggles are a constructive business. I'm waiting.
No.
Yeah.
I mean, the only one I know who wears them is Anurag Ranan. What's he know?
Exactly.
Oh, help
and
me.
he's in Chicago. All right, so let's look forward. What else do we have coming up this week? We've got. Sorry, so that's Meta. I'm fine. Yeah. If I were, a hedge fund manager, this would be the quintessential buy on the weakness kind of story. How about Google? How about Microsoft? A couple other big names coming up this week.
Yeah, I mean, with Google and Amazon to an extent, it's still a cost-cutting story.
Okay.
Look, they are still into that cost-cutting mode where margins will go higher because of the cost cuts. Meta is done with that. They were early to it, and they're done. And now it was about, okay, can you do more in terms of capital allocation?
Right.
They're not doing that. Obviously, it's a multi-year investment cycle, as Mark Zuckerberg described it last night.
Let me interrupt the program right now to welcome Penelope, grade 2. Penelope, I mean, what do you think? Is Taylor's new album good? I mean, if you listen to Taylor's new album, no, she hasn't listened to it yet. Penelope, good to see you.
Week.
Take your children to work day. Penelope came in styling.
In the house.
Cowboy boots, major pink glitter look as well. Pick up the conversation.
Very good to bring your child to work day. All right, so Mandeep, if I'm Google, I'm looking at the stock. The stock's up 14% year to date. It's up 50% into the trailing 12 months. Is this
5-0?
5-3%. Yes, exactly.
Wow.
It's had a nice move there, Tom. So, this is almost a $2 trillion market cap company. I'll round up and say $2 trillion. Is it still a digital advertising story, or what's really driving this stock, do you think?
It is, and I think for the whole of last year, everyone was expecting their core search business to be disrupted by ChatGPT.
Yep.
Obviously, I think the market is telling you otherwise now, and the stock... momentum seems to be suggesting their search is probably insulated. And look, they are way ahead. They are one of the 3 companies with their own large language model, which they can deploy on their search. They're not going to do it the way ChatGPT is doing, because it's going to be disruptive. But still, they are right up there when it comes to having the technology.
My family members who are Mandeep Singh-like rave about what Microsoft has done for people like you. Do you have a confidence we can take LLM and AI over to other more consumer worlds? I don't see any evidence.
Look at Meta last night. They called out how their recommendation engine is far better, and the videos being more relevant to your consumption because of AI. Their ad targeting is far better because of AI. The ad creation process is getting better because of AI. So all this is evidence. Like Meta is actually deploying AI, and a lot of it is powered by generative AI and LLMs. So
what's the revenue growth rate you're modeling on that wishful thinking?
You see that
Double
in the
digit?
ad pricing, yeah. And so AI agent is a new concept they talked about, which they can monetize, but you're going to see that in the products.
I got 20 seconds. Can AI help the Detroit Lions in the draft?
Please.
Well, look, I think...
I bet you they are using it.
They are, and this thing is going to be pervasive. If there's one thing with AI is with any type of customer service, any type of automation, you will leverage AI.
Right,
so you're not going to see it as a separate product.
Only Mandeep Singh can give a straight answer to the Detroit Lions in AI. With our news and AI in New York City, Michael Barr.
I got to follow that. Thank you very much, Tom, Paul, and Lisa. Donald Trump will be back in the New York City courtroom as his hush money trial resumes at the same time that the U.S. Supreme Court hears arguments in Washington over whether he should be immune from prosecution for actions he took during his time as president. Earlier this morning, former President Trump greeted construction workers on a Midtown Manhattan street. He told reporters about the Supreme Court hearing his case about presidential immunity.
We have a big case today. This judge isn't allowing me to go. We have a big case today in the Supreme Court on presidential immunity. A president has to have immunity. If you don't have immunity, you just have a ceremonial president.
Trump also complained about the gag order in his hush money trial, saying they've taken my constitutional right away. An Arizona grand jury has indicted former President Trump's chief of staff, Mark Meadows, lawyer Rudy Giuliani, and 16 others in an election interference case related to the 2020 presidential vote. The Arizona House has voted to repeal the state's 1864 abortion law. Bloomberg's Ed Baxter has the story.
The almost complete ban on abortions, only to save the mother's life, could go into effect as early as June 8th if it isn't repealed. Republicans have narrow majorities in both chambers, but recent uproars have obviously changed some minds. Did so in the House. The state Senate could take up the repeal vote next week. 2 Republicans already say they are supporting it. Governor Katie Hobbs has been urging the repeal. Now, this will add to the heat of the issue nationally, politically. Ed Baxter, Bloomberg Radio.
Support among swing state voters for U.S. aid to Israel has plunged in the months since the country launched its war in the Gaza Strip. According to the latest Bloomberg News Morning Consult poll, 51% of registered voters in the 7 states that will decide the 2024 presidential election said they either strongly or somewhat support aid to Israel. That's down 11 percentage points from November. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Paul Sweeney, let's shift on the draft over to the other angle here, which is the future of ESPN.
Yeah.
We used to hang on it, and then Justin Smith, who used to drive our media, told me once, he was way out front in this. He said it's all going to the cell phone. So I'm looking at baseball scores through the evening, see what the dreaded Red Sox are doing. On a cell phone. Sure. I'm not watching ESPN like I used to.
No.
Do we watch the draft, but whether ESPN in 3 or 5 years?
I think it's going to be, they're telling you right now, most of their programming is going to their streaming platforms. The biggest issue to watch with ESPN is their big sporting franchises, NFL. Where is that going to go? Are they going to keep...
You mean like the actual games?
The actual games. Are they going to migrate that to their digital platforms? And the answer is yes. It's just a question of when. And so, but again, sports, they have the rights to pretty much everything out there. The question is for them is, can they monetize that in a digital world to the degree that they did it with the...
We're going to drive this conversation forward. It's key for Disney. Paul keeps telling me Disney's a theme park with some bolt-ons. I guess ESPN. I can't believe ESPN is a bolt-on. Hard to believe. From New York City, Bloomberg Surveillance.
hits, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokers Studio, I'm Lisa Mateo. Futures lower this morning. NASDAQ futures down more than 1%. We have S&P futures down 0.7%. Dow futures down 0.5%. Over to the two-year yield at 4.93%. That's little change. The 10-year yield at 4.66%, and that's up 1 basis point. To commodity, spot gold higher at $2,325 an ounce. Brent crude, $88 a barrel. Another big day for earnings. A few more companies reporting. Hertz down 5%. Reported a loss that was nearly 3 times worse than analysts expected, $392 million. And that as it starts to unwind that fleet of Teslas it's trying to get rid of. Ford, they're retooling its EV program as the market for plug-in vehicles starts to slow. It also posted better than expected first quarter results, and that was thanks to strong demand for its work trucks. Those shares up more than 1%. And from cars, we go to motorcycles. Harley-Davidson up 1%. The first quarter revenue beat estimates on strong North American sales. Now, aside from earnings, a ton of economic data out today in less than 15 minutes. We'll get GDP, the PCE price X, a read on wholesale inventories, initial jobless claims for last week, and then at 10 a.m. Wall Street time, we switch to pending home sales. That is your Bloomberg Business Flash. Tom and Paul.
It's crazy. We welcome all of you. We are commercial free over the next good half hour, even further. We have critical United States GDP statistics with claims here at 8:30. Jim Caron of Morgan Stanley is scheduled to be with us. We hope that happens. This is an absolute joy. Alberto Gallo is without question the most interesting guy. You know, like, you remember the beer commercial, the most interesting man in the world?
Yep.
That's Alberto Gallo. He's a force in Italy. In the bond business, he owns the high ground. We're thrilled that he joins us from Andromeda Capital. It's been way too long since Alberto's darkened the door. Alberto, what is it like to go to a naval academy in Venice, Italy? That seems like nirvana. Like, were you out on the far right of the island at the Arsenal? Is that what you do when you go to a naval academy in Italy?
Tom, you're too kind. Good morning. It was a very tough life experience, but very useful for the future, actually. It's very useful when navigating the markets as well.
I mean, it's fascinating to me, the public service, and you're based in Venice, Italy.
Yep.
How much do I love Venice, Italy?
Oh, so who doesn't?
And the challenges they have are great. Alberto, what's the biggest challenge right now in the bond market? I got price dynamics, I got yield dynamics. What's your biggest headache right now?
So we are in a higher for longer world. And I think the challenge is that not all markets are having the same reality check. So the Fed has essentially told people, we're probably not in an urge to cut, right? They've told that they're not in a rush. And the yield curve in the US has repriced. There's still a couple of cuts there, but they might not do it. It's a bit of a political choice here. The economy is doing really well. We'll learn more in the next 10 minutes. But if you think about Europe and if you think about Japan, right? Japan is the anchor of the low yield world. So those markets, no one told them the bad news, right? The yields in Germany, in Italy, and in Japan are still very low. So I think we still have to go through a repricing. And there's a lot of companies that depend on these low yields that haven't adapted yet. So, it's been so far a very smooth transition. But the higher for longer period, if you take out that carrot of rates coming back down, it's going to be a tougher world for a lot of people. So we haven't seen tighter financial conditions yet.
So I guess if you're a fixed income investor, do you stick with the 2-year Treasury at close to 5%, or do you go out and take some credit risk here, Alberto?
So we have been negative on duration pretty much, even last year with a few exceptions. And, we've called for some time, no cuts at the Fed, no lending. That continues to be our view. But in the US, there's more of that being priced right now. And so we don't like, we're focusing now on the Eurozone duration, on essentially being short bonds and BTPs. What we like is, we don't just do government bonds, we look at corporates and banks. So we like credit. There's good issuers that used to fund at high yields, continue to do that, and they can pay, double-digit coupons. So those are good cash flows that you want to have as we adjust into this new higher for longer world. But I would say that here, DCB will do one cut. The Fed might not do any cuts. DCB will do one cut. But it's going to turn out into a reverse Trichet. It's going to turn out to be a mistake, in my opinion.
We welcome all of you on Apple CarPlay, on Android Play as well. On YouTube, search Bloomberg Podcasts. And if you look at our guest list there right now, it's simple. The best we can give you. Alberto Gallo with us from Andromeda, and Jim Caron will join us from Morgan Stanley as we look at a first look at a booming American economy. Paul?
Alberto, in the credit markets, where do you see the best opportunity, the U.S. or maybe over in Europe?
There's a lot of fears of the European recession, so we do prefer European credit. So the way consensus positioning is now is that people are long on European duration and they're short on European credit. And we take the other side because we think that actually after Europe is spending, after Euro Parliament elections, there's going to be more push towards spending, also with a connection to defense. And generally, growth numbers are not that bad and you're getting paid pretty well. So it's a good environment to bet on defaults being low. Defaults are going to rise, but they're rising from 2 to 3%, 4% in the high yield market. You're getting paid double-digit coupons. So it's a good environment. And even the worst companies are still kicking the can. So we like credit in Europe. We like energy. We like industrials. We like banks. It's all a pretty decent environment, and you're getting paid very well to wait here.
Alberto, you're in the Metropole Hotel, that famous itty-bitty bar they have in the front there on the shores of Venice. And you're with, Andromeda clients and all, and they just say to you, what about the interest cost boom in America, the moonshot of cost of United States debt, our interest expense? How do you respond to the fear about a higher interest expense with higher yields in America?
I think, Tom, a lot of the movements that we are seeing in the market today, you can interpret as irrational exuberance, right? You see stocks going up, gold going up. The reality is investors are rational here. They are looking at self-preservation, and they're thinking about how governments will be able to repay the growing amounts of debt, or otherwise they're going to have to keep printing. So, buying tech monopolies, buying gold, buying credit instead of buying sovereign debt are all rational self-preservation asset allocation decisions. And I think that you have to really think about this debasement of paper money going forward. And we don't. That's why we don't like duration. We don't like so much government debt.
Alberto, I'm asking for a friend. Is Juventus AC Milan? Is that like a big game this Saturday?
It is. It is.
Okay. Good morning, John Farrow. I'll be sure to tell John that. Alberto Gallo, thanks for the Italian football brief there. Alberto Gallo is with Andromeda. Here's the right guy to talk about the partial derivatives of the algebraic function known as American GDP. He majors in physics for Mr. Peck and the crew at Morgan Stanley. Portfolio Solutions Group CIO Jim Caron joins us right now. Which of the alphabet soup of the function matters? The consumption, investment, government, or NX?
Thank you, Tom. Well, look, I think all of it matters, but right now I think consumption probably matters the most.
70% of GDP, roughly.
70% of GDP. It's something that what we're looking at today is really about the strength of the consumer, the jobs data, all of that stuff is going to matter quite a bit. That's been probably the most surprising element of this period of time is that we've been able to bring the inflation rates down, but the jobs data has actually stayed relatively strong, which has kept surprisingly strong GDP numbers.
Does the yield space, Paul's on the 2-year 5% yield, does the yield space describe Ellen Zentner's economics?
I think it does. It's just really a question of, like, if we have the 2-year yield flirting with 5%, that makes sense in an environment where we believe the Fed may only cut possibly one time this year. And that's really indicative of the strength, and we're going to see what the first quarter GDP numbers come out to look like in the next 4 minutes or so. But what's also very important about that, though, is really tomorrow's PCE number, the inflation number. So good growth, like 2.5% growth potentially, as a potential growth, or 2.7% is what's expected on the Bloomberg surveys for PCE, and for GDP it's 2.5%. If that growth number is good, that's fine as long as inflation's low. But if inflation turns out to be high with strong growth, then the Fed has a problem. The Fed has no problem with strong growth and low inflation. Full employment, strong growth, stable prices, that's what the Fed wants.
So what are the good folks at Morgan Stanley Investment Management doing in terms of getting positioned here for a Fed that I guess the market's now come to the conclusion, as you mentioned, they're not going to be cutting it as much here. What do we do?
Yeah, so I think really, the key element here is when we manage multi-asset portfolios across fixed income and equity, one of the things that we have to think about is how do we use bonds to hedge equities? And one of the conclusions that we've come up with is that you may not want to be as long duration in periods of potential turmoil, like the correction that we're seeing in the markets today in equities, as much as you had in the past. And the reason is that I think that the bull market in bonds, in my view, has ended. We're likely to go sideways in a range in interest rates for a long period of time, in which case having extra long duration in your portfolios these days is probably not the most optimal.
Put some numbers on that. I mean,
sure.
Muni bond people, short duration's 20 years because they're all yield dogs.
Yeah, no.
Well, give me a year statistic instead of this baloney duration.
Okay. Yeah, no, good point. And it's good clarity to add. So the aggregate index for the U.S. is about 6.5 years of duration. So that's generally what people think of as neutral duration. What I would say is that you might want to be somewhat underweight that and have maybe somewhere on the order of like 5 to 5.5 years of duration. So just slightly lower than index duration, I think, is a more optimal hedge against the broad returns in your fixed income and equity portfolios. Now, that may be financial market heresy to say, go underweight duration and it reduces risk, because typically people think adding bonds and adding duration is what reduces risk. And that's historically been true, but that's been true in a bond bull market. And
I'm with Mr. Caron on this, to say the least. We're 90 seconds away from a hugely anticipated GDP number. Let's review this. The quarter ends 12/31, and they take a month to get it out. So now the quarter ends 3/31, March 31st, and get out your calendar, in 4, 5, 6 weeks along, we get the first look at GDP. And I thought Veronica Clark was good, Victoria Clark. It's Citigroup of saying recently the first look, the second look, the third look have been pretty smooth. It hasn't been adjustments. So I think there's even more weight here. The Atlanta GDP number, Paul, 2.7%. The Bloomberg survey, 2.5%.
Yep. So, this economy, the growth has slowed, but this growth is still there. Inflation's coming down. Yes, it's still sticky, but you put all that together. And as Jim was just mentioning, it kind of suggests this Fed doesn't have to, get over its skis too much.
I'm glad we got the GDP price index. 1.6% was a prior, and it explodes up to a 3% number here. We're going to see in 15 seconds. There's also core PCE price index, but then don't confuse that with the inflation data that we see tomorrow. It gets a little confusing. Jim Caron will explain that if he stays around here. It's Bloomberg surveillance. Here is the data coming out. We get trade data first. It's pretty much a little bit larger deficit, but I'm not going to go. Wholesale inventories, I don't understand. Claims is a terrible number. Are you kidding me? 207,000. And now we get the GDP statistics, and this will be market moving. 2.5%, the survey, it comes in diminished. Jim Caron, 1.6%. Personal consumption, lighter. GDP price index, 3% is 3.1%. And core PCE price index, I guess I'm going to say explodes. Maybe that's too large. 3.4 up to a 3.7% statistic. And the VIX launches here. The 2-year yield, 4.92%. I think there's enough wow here just in the headline numbers where there's almost confusion in the market?
I think there is confusion in the market. We're seeing the S&P futures weaken a little bit here, down about 1% on the S&P. And just looking at the short term of the yield curve, 2-year Treasury is up 1 basis point, 4.94%. But again, the GDP annualized quarter on quarter, kind of the headline number, 1.6% growth there in the first quarter. Consensus was 2.5%, as Tom was mentioning. And I'll also highlight prior period was 3.4%. So if you're looking for a deceleration in the economy, this data certainly kind of bears it.
Chris Yancey driving our coverage for Top Live, and he says simply 1.6% growth rate is lower than any of the 59 estimates of the Bloomberg surveys, of course, except Jim Caron. He nailed it. But what we've got is a deteriorating market. NASDAQ off Facebook, 1.3% as well. I'm watching the 2-year yield, 4.94. Yes, it's gone green. We got a higher yield there, 4.95%. Yeah, really starting to move. Like there was almost a 30-second delay there when the data came out, Paul.
Yeah, people are just trying to grasp it here, but again, as Bloomberg Live, we're just following the reporting. Bloomberg Live, really. It's talking about a significant underperformance there in the U.S. economy, finally starting to slow. When you think about the long and variable lags of the higher rates, maybe we're seeing it in the
fascinating. We'll get to Jim Caron here in a moment. Our economic indicators each and every day, 7 days a week, but particularly important days like this, brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit Commonwealth.com to learn more. Jim Caron, the numbers, I think, had enough shock factor. And, I've been doing this a few years. The markets didn't move for 30 seconds. It was like stunned.
Well, this is a big miss. And like you said, many economists, nobody really had this number. I mean, this is, look, one of the big positives of the first quarter was that there was a narrative that we were just growing very, very strong. And this is unwinding a lot of that narrative. So now this is actually a very friendly number for the Fed.
Yeah.
Because what the Fed has been saying is that we're going to get this economic cooling, and we don't have to worry about potentially these inflation numbers that have been coming out hotter than expected, that it's all going to correct itself. This is a major step in the right direction. It starts to put June back on the table.
You think so? Okay.
Potentially, it puts June back on the table. Now we're not seeing that right now in terms of the price action of treasuries. Now, of course, everything's going to depend on, is there a revision to this? Was there some type of an anomaly? We've got to go through the numbers. We have to go through the math of this whole thing. But effectively, a slowing like this is going to bring down some of the inflation angst that's been in the markets.
Yeah, I think it's really interesting. I was looking at the WIRP function to see how that's going to start reflecting any changes in the market's expectations for the Fed. And you're right, it seemed like the market, we started the year with 6 cuts potentially. We got down to, 2 or even fewer than 2 just as recently as yesterday. And maybe this will cause the Fed to maybe think about being a little more dovish.
And there's one other thing that I really want to bring up, because I think this is very, very important, is that earnings expectations are highly linked to GDP growth. So I know we're talking about the bond market a lot. Let's talk about the equity market just for a second here. If earnings growth is slower in the first quarter, that's going to change a lot of people's full year earnings estimates for 2024 and potentially even going forward. So the equity markets are actually responding more strongly on this, because it's basically making many analysts take down some of their robust earnings expectations.
If you're joining us, we are commercial free, and thank you for that. To the top of the hour, Jim Caron of Morgan Stanley is with us. We're thrilled that Anna Wong, our chief U.S. economist, will join us here in a bit. And because of these seismic moves in the market, we're ripping up the script, and we'll get somebody here after Dr. Wong, I think, to focus more on interest rates. We'll see what our team does in booking that. Futures have not plunged, that's too much to say, but down 1% on S&P. The Dow futures down an equivalent 1% off of Meta, and maybe worry about Microsoft and Google. NASDAQ down 1.3%. Paul Sweeney can't get the 2-year back to 5%, but 4.97% as a rebound of 5 basis points. 10-year yield gets my attention, 4.68%. The real yield, which is really what I look at, is a shocking 2.26%, and that climbs ever up. Obviously, dollar churning, and the yen, we're looking into Sunday evening in America. Monday morning, what will the Japanese do with a euro yen of a 167, which we saw earlier? Jim, I got 8 ways to go here, but let me go to what I learned in school. The textbooks. You have physics envy, which is why Caron's here. And the answer is you got to hang your hat on one thing. And to me, it's a 10-year inflation-adjusted yield. And forget about the math, and let's not impress people with a log. On a semi-log basis, I'm getting out to a real stress point at 2.26%.
Yeah, the real yields are certainly moving higher, and to the point where this has historically demarked a bit of a slowing of economic activity. But none of this is happening in synchronicity to the extent that one of the things that we're also seeing is the prices paid components and the pricing components of the internals of the GDP number are actually causing the bond market a little bit of angst here. So on one hand, we have a weak headline print. On the other hand, we have some inflation and pricing pressures. So in theory, inflation is a lagging indicator. So inflation should fall on these things, but unless there's something that's just going.
Well, what's Ellen say? Stop. I mean, you got a team of 14 people. Caron's there with 2 interns. They're from Bowdoin. But Ellen Zentner's got like 25 people. What do they say about the disinflation vector at Morgan Stanley?
Yeah, so look, I mean, it's as Ellen likes to put it, it's going to be a slow, bumpy path lower. So, inflation is likely to come down. It's just a question of does it come down in a linear fashion where people are comfortable with the pace, but the trajectory, nobody's really disagreeing with the direction of inflation. Most people agree that it's coming down. It's just a question of, is it coming down fast enough for the Fed to start their rate cutting cycle? And that's the debate. So what Ellen pushed out in terms of her Fed forecast was from June to July, that the first rate cut would start to come in July. And I don't think that this number might not change that in many ways.
Okay, is there an inertial force here right now? Are we getting to where there's enough yields? We're truly on a physics basis. I make jokes about it. But seriously, are we getting a weight towards an inertial force of higher yields?
Yeah, so I think, as you were saying earlier, many people came into this year overweight fixed income, long duration, and this has been correcting. Now, the positives around this is that at this backup in yield, if you're looking at a multi-asset portfolio, you can start to think about owning U.S. Treasuries. You can think about owning bonds, high-quality bonds now, as a reasonable hedge against your equity, and you can actually potentially get some return from these levels.
Sweeney's going to get his 5% 2-year yield and a cup of coffee. Out on YouTube live chat, James with a real smart insight. Stagflation, Jamie Dimon nails it.
Yep.
I mean, that's really what we're talking about. I mean, you mentioned David Weston. He's going to be with Professor Summers, and Larry's going to pick it up and go, here we are. But, I mean, that's what the research papers, Paul, are going to look like. Jim Caron, one more question, then we're going to go to Dr. Wong, and we're going to bring Jim Caron back after Dr. Wong.
Hey, Jim, I'm looking at the 2-year, just today up 6 basis points, as Tom said, with 4.99%. And you've mentioned fixed income as a hedge for equities. That did not work in 2022. That 60-40 portfolio did not work for anybody. Is that still something you guys think about? Is that still something we should keep in our toolbox?
Yeah, I mean, we have to think about how we use bonds to hedge. And the idea was that you could passively buy fixed income and it would just represent a great hedge. And this is one of the reasons why I think you should hold less fixed income exposure in terms of duration to hedge against your equity portfolio. So to have slightly less, like I was saying, 6.5 years of duration is the index average. That's what's considered neutral. I'm saying you should have maybe 5 or 5.5 years of duration. So I do think we need to think differently about this. We have to remember that for 40 years, from 1981 to 2021, bonds were in a bull market. Today, I think they're largely going to move sideways. Okay. So your expected returns are really the coupon out of fixed income.
Stay with us. We want to get a couple more questions of Jim Caron after we hear from Dr. Wong. Futures deteriorate. The Dow down 424 points. Anna Wong joins us now from the University of Chicago and the University of Bloomberg in Washington. Anna Wong, is this stagflation?
Tom, actually, the GDP number is better than everybody thought. I think the knee-jerk reaction of the market in pricing in more rate cuts is probably will be retraced later on. That's because if you look at this 1 percentage point miss, half of it is coming from more imports. And economics tells us that when an economy is importing more, it's actually a sign of consumption strength, not weakness. And if you look at the details of the consumption miss, also, services is really, really strong, even stronger than the previous quarter. It's just the weakness in PCE spending is coming from cars. Just people are not buying much more cars. So I think overall it's not as bad as you think, as most people think. The knee-jerk reaction is taking it right now.
I bought some new wheels this quarter. I think I contributed to that, to the GDP. And it was not electric.
This is a big deal. I mean, Paul, jump in here with Anna Wong, but folks, this is a big deal. The granularity that Ellen Zentner or Anna Wong go through here, it's not like Jim Caron bloviating about the 10-year yield or me making jokes. The granularity here is like 40 pages of single-digit lines.
Well, that's what they get the PhDs in economics. I mean, who does that?
Yeah.
Anna, so when we look under the hood here, I mean, I'm looking at a 1.6% print here for the first quarter. Last quarter's 3.4%. That's really a slowdown. What do I make of that?
Well, I think the answer lies in the data that was released yesterday to very little fanfare, which is that BLS put out a population survey that underpins the non-farm payroll data. So ultimately, in 2025, when BLS revised the data for 2023, they will be using the data yesterday, and it actually showed that private job gains were actually negative in the third quarter, as opposed to, in fact, a negative almost 200,000 in the third quarter. So it's telling you that the strength in GDP in the fourth quarter is actually probably a statistical anomaly.
Right.
Because in fact the payrolls heading into that quarter was negative, likely negative.
And I got time for one more question because we're juggling all sorts of good voices here. Ian Lingen, thank you for calling in. We'll see if we can get him in. Ira Jersey and Jim Caron with us in moments. Anna, before you go back and publish, with all your acclaim, do you have to brush off a recession call? I mean, I know it's not 1.6% is nowhere near NBER recession, but do we need to begin to think about that out farther?
Oh, definitely. I mean, I think after having 4 months of data, we have decided that even though we did see from yesterday's revised data that payroll is likely negative in the third quarter, I think Powell's pivot in December was so powerful that it staunched a lot of the emergent recessionary dynamics in the third quarter. And right now, we have revised up our first half of growth path and also inflation path to be stronger. And I think what we need to see from Powell next week is a bigger hawkish pivot in order to get inflation back on a path of disinflation, given that the strength right now is due to its pivot in December.
Dr. Wong, thank you so much. Anna Wong, and there'll be a huge rewrite out on Bloomberg Economics today off the shocking GDP. S&P futures deteriorate. I'm watching the Dow negative 436. The VIX not out of stick yet, 16.66. The real yield that Jim Caron and I were talking about, wow, 2.27%. Here's what we're going to do. We're going to finish up with Jim Caron because he's got to go back and have a shout match with Ellen Zentner. And then we're going to bring on Ira. Is Ira work from home today or is he in Princeton? He's in the office only because it's take your daughter to a good soccer game with Aston Villa. We'll get to Ira Jersey here in a moment. Jim, let's finish up with you so you can go back and publish. What part of the yield curve will be most affected by sub 2% GDP?
So, look, in theory, what it should be is the 10-year yield. So in theory, the curve should start to flatten down because if you have a weaker growth economy and it shows that you're going into a slow period and a slow patch, longer duration actually will be a reasonable hedge in that particular environment. So the front end right now, and I think the bond market is looking at one thing. That's the consumer side. That's the prices side. The equity market is looking at the whole picture, and it's looking at that 1.6 versus the 2.5. And I think that is that's the mismatch right now in the market. So right now we have bond returns and equity returns highly correlated. That's dangerous. High correlation is dangerous. So there's no place to hide, right? So if you bought bonds to hedge this number, you lost, at least right now at this point. But like Anna was saying, I do think that some of this bond sell-off will start to get reversed once it gets digested. Yes, it's, imports are a very important component
Paul
of this.
and I got to make some news here today. I mean, there's no court. We got to make some news. Ian Lingen, and we're sorry we can't get Ian Lingen in from BMO. He's got to go into a Bank of Montreal conference call. But Ian Lingen has said at some point the 10-year goes price up, yield down. Is this the moment where we finally get a catalyst for a lower 10-year yield that, just as one example, brings mortgage relief across America?
So in my opinion, the answer is yes. I do think that, 475 in the 10-year yield. I know we're kind of close to that right now. So let's say that we're just about there. I think that's a reasonable line in the sand to draw, and it's a place where I would start to take some bond risk.
Paul, round it up 4 digits. I know you want to jump in and round it up, Paul.
Yeah.
4 digits, 5% on the 2-year yield.
Exactly right. Hey, Jim, as you go back to your offices at Morgan Stanley Investment Management, you sit down with your PMs this morning. Are you guys going to change anything in your portfolios? Change your outlook, change your allocations? Think about it, maybe a world that maybe stagflation is something we have to think about.
Well, I don't know. I mean, I think it's a little early to call for stagflation, but so we've moved more towards a neutral posture at this point. So we've taken our equity from overweight to underweight end of the first quarter. But I think in bonds we are going to start to take our duration up a little bit higher because these yields are appetizing. So that's likely the next move for us.
Go ahead, Paul.
No,
one more question to Caron. Jersey's having a tantrum.
I know.
It's take your daughter to work. Did you bring any kids in? No.
My kids are too old.
My kids are too old.
Yeah,
I go to Afterthought today. I go, you want to come into work with Dad? She's looking at me like, is it that or go to Eli's on Madison Avenue and chat on $25 at cheeseburgers?
Exactly.
I mean, what you going to do? Elena's waiting. Paul, get a question.
Jim, real quick, what do you think the Fed's going to do looking at this data today?
So I still think it's Powell's remarks from a week ago still hold. I think he's still waiting to see more confidence. We still have to see those inflation numbers come out softer consistently.
Yep.
Yeah.
This has been great. I really look forward to talk about triangulation. I'm going to blame Steve Roach for this. Maybe there's somebody else. They fight like cats and dogs at Morgan Stanley. They've got my greatest respect. The next meeting of Karen Zentner and Mike Wilson.
Oh boy.
That's going to be. It's going to be.
We should do a remote broadcast.
We should do a live broadcast. It's like the NFL draft. We'll have to see. Jim, Caron, thank you so much, particularly for coming in today. Greatly appreciate that. Joining us now, and of course, people on YouTube, you can take this in on Apple CarPlay. It's really a sight to behold. Ira Jersey is here in Princeton, best food court in the world, with Elena. Thank you, Elena, for joining us today. Take your father to work day, and it's good that she could come in. Is Elena an Aston Villa fan?
I don't know. She's a women's national team fan for sure.
There you go.
But I don't know if she has a Premier League team. I should ask her. Interestingly, Tom, we were on our way in. I was explaining, C plus G plus I plus X with her.
There we go.
And so it's very apropos that we had the GDP data this morning that obviously what was pretty interesting. So for sure.
It's great that Elena, in the 7th grade, she's wearing all black today, which clearly is the Aston Villa chances of doing anything here in the final days and weeks. Ira, what a shock report. I got a 1.2% SPX decline. Futures down 61. Dow futures down, my eyes are failing me, 450 points. There is a market shift. What will you write after this report, Ira Jersey?
Yeah. So I've been looking at you mentioned stagflation once or twice with Jim just a minute ago. We're not near recession at 1.6% GDP growth, but obviously the bond market is really fixated on this on the PCE number. So coming in at 3.7% for core PCE in the first quarter, that implies that March actually saw a higher than expected month-on-month print for core PCE, which we'll get tomorrow morning. So probably something more like 0.4% as opposed to the 0.3. And that's an environment where the Fed's not going to be thinking about cutting interest rates, right? So Anna mentioned earlier in your show that, Powell pivoted in December, and then he started to pivot again. But he's going to have to say, look, we're not going to be cutting interest rates if inflation remains this high, and that's one of the reasons why you have the bond market action that you have with 5% 2-year yields, and then a continuation of the sell-off in the long end too. 4.7% is what we have as a very important technical level on 10-year treasuries. So, and we're kind of right there right now. So we break that pretty convincingly, and you're probably looking at another test of 5% in the near term. It's probably so therefore, I think it tactically it's probably a little bit too early to get long duration, but there might be an interesting time to do that in the not too distant future.
We have a rate hike. Is that on the table, Ira, in 2024 from the Federal Reserve?
It's certainly not an impossibility, especially if you continue to have reasonably decent data. And when we dig into all of these numbers, and Jim and Anna didn't have as much time as you guys gave me for digging into this. But when you look at the consumption numbers, right? So consumption is one of the big pieces that missed in today's GDP report. Services still growing at 4%. On an annualized basis. 4% growth in services is probably going to keep us out of a recession for most of this year, unless that were to turn significantly. The weakness in consumption all came from durable goods, and a lot of that was from automobile sales. So it continues to be sectors that are interest rate sensitive, like housing and like autos, that continues to be affected by the rate hikes, whereas services, which tend to have less of a need for large purchases on credit, continue to grow pretty robustly. So I think we do have this significant change from what's happened in other cycles, just because of the dynamics of the sectors that are doing well versus the sectors that are being more challenged.
Ira Jersey with us, and we will continue. Ian Lingen at BMO into his conference call. Sorry not to get him on. Publishes his note, Paul, overall higher inflation and a strong jobs market are overshadowing weaker consumption. It'll be fascinating to see what Dr. Lingen says about what yields do, because he has that stunning call towards a lower yield regime, Paul, of price up and yield down. We're not there yet.
We're not there yet. The 2-year Treasury, again, we'll round up. We'll call it 5% on the 2-year Treasury. So what are you going to be looking for tomorrow in that PCE data, Ira? Again, we've been told by all the economists that is the Fed's preferred view of inflation. What are you looking for?
Yeah, so I think after today's numbers, back of the envelope, I don't forecast that. That's Anna's job, but it's probably going to be, assuming all the math is going to work out, probably something more closer to 0.4% on a month-to-month basis instead of 0.3. That was the consensus forecast before this GDP report. So I suspect that you'll see a few people maybe edge that up a little bit. Either that, or there's going to be revisions to February too, right? Because remember, the GDP report is 3 months, obviously. But nonetheless, you're going to have in aggregate somewhat higher. I'll be looking at the mix of sales. So one of the things that we get with the PCE report is, yes, we get the inflation data, but we also get the personal consumption numbers. So we can see what were the actual sales in services, durable goods and non-durable goods sales. And some of that we got in today's report with GDP, but the path and pace of growth in those sectors will matter a lot, I think, for the future of the economic outlook, and therefore obviously rates and equity markets and the like.
Ira Jersey, thank you so much. We've got to sum everything up here to the top of the hour. Ira Jersey writing for Bloomberg Intelligence. You'll see that out in the terminal within the hour as well. Thank you, Anna Wong from Bloomberg Economics. Really important comments there on a potential recession. We will feature that in my podcast today, Single Best Idea. And I thought Jim Caron was brilliant.
Great.
Just
Fortunate to get him here in studio. Yep.
The mix, Paul, of what's going on. Look at the 2-year, 5.01%. Folks, there's febrile, is that the right word? And it's like a Duke word. I can't keep up.
Yep.
The yen, 155.72. Euro yen, 166.44. There's tensions out there in the market. This is with the euro stronger today. Euro dollar 106.89. Futures at negative 63. Dow futures negative 446. Maybe some stability here off a 1.6% GDP number. What else do you see, Paul?
Well, I guess what I see, Tom, is I don't think I'm going to be refinancing my mortgage anytime soon with these rates moving higher here. So this is another drag for the U.S. consumer here. And I'm just looking at the Bloomberg Top Live, which is the way, when you get this breaking news, Tom, the Top Live on the
Chris
Bloomberg
Ansie's
terminal
driving it
is
today.
worth its price.
He's the only one at Bloomberg who's worked in
Unbelievable.
every single office
Every
of
day.
Bloomberg.
U.S.
Yeah.
economy grew faster,
Yeah.
slower than expected. Personal
Right.
spending higher, inflation higher.
There's a mining merger of
Yes.
Anglo-American and Broken Hill Properties. The Veronicas have shares in BHP.
Let me show you all the things that we could do. You know you wanna be together, and I wanna spend the night with you. Yeah, yeah, with you. Yeah, yeah. Come with me tonight, we can make the night last forever.
is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene and Paul Sweeney with an adjustment to the markets off sub 2%. Real GDP, inflation higher. It is a stagflation. Good morning. Lawrence Summers, who's done so much in the debate of stagflation. I'm sure look for Larry Summers, the David Weston Wall Street Week. That'll be fascinating. I assume taped tomorrow for weekend consumption. Our consumption right now is just simple. We welcome all of you on Apple CarPlay. We welcome all of you on YouTube, Bloomberg Podcast, search Bloomberg Podcast, really intelligent live chat here. People are busting my chops about, take your work today. But, I mean, they just walked by us. Yeah. I lost count.
I know. There's like we're overwhelmed by children coming to work. Maybe we can take a break.
They were all freshly scrubbed and,
all
properly dressed, like Lisa's kids, I mean, it was good. Lisa's kid came in yesterday, brought in a case of Pabst Blue Ribbon.
Nice.
It was great.
That's what the kids are doing today.
That's what they do.
Take your kid to work today, and he brings in a case of Pabst Blue Ribbon. That worked out. Bloomberg Podcast out on YouTube. What do we need to say? We need to say thank you, BNY Mellon Insight. Bloomberg Surveillance in this hour, brought to you by BNY Mellon Insight. June 4th to the 6th in Nashville.
I will be there.
Tennessee. Don't miss the essential event for the financial advice community. Visit insight.bnymellon.com. It's so cool. Paul goes down there. Is Alex going with you?
Sure. Yeah, we are. We're
Tandem,
going down.
Alex Smith, Paul Sweeney, they will be there with BNY Mellon Insight. They go to the Ryman Auditorium.
Yep.
And they see, Eric Church and everybody else who's like, doing the, Ricky Skaggs, whatever. I don't know. Matreka Berg will show up. And then they go do BNY Mellon Insight. Look for that in Nashville, June 4 to the 6th as well. My first mention of it. Thank you, BNY Mellon, for that. We need a data check. The news flow is extraordinary. Lisa Mateo.
Oh, yeah, it definitely is. You can take a look at the markets now. We have the NASDAQ, Dow, S&P futures all down more than 1%. And this is after we had some great economic news that just came in. A lot going on. GDP increased 1.6% annualized rate. Personal spending rose 2.5% pace, a closely watched measure of underlying inflation. Well, that advanced at a greater than expected pace too. Jobless claims, that came in weaker than expected. 207,000 applications filed last week. So if you're just tuning in, that is the latest. Let's get to the bond market. The 2-year yield at 4.99%. That's up 7 basis points. The 10-year yield at 4.71%, and that's up 6 basis points. To earnings we go. There's a lot to get to. American Airlines up 3%. First operating revenue for the first quarter met estimates. Then you have Southwest on the other side, down 8%. Reported wider adjusted loss per share. It also said it's slowing growth. It's ending service at 4 airports, offering voluntary leaves, and this is after Boeing reduced the number of aircrafts that it will get this year. We have Boeing down 1%. Meanwhile, Airbus, they're getting a boost from Indigo. It plans to buy as many as 100 Airbus SE A350 wide-body airlines. That is your Bloomberg Business Flash. Tom and Paul.
In scheduled, folks, I hope to talk about the mining merger in Australia, in London. We're going to try to get to that with the news flow in this hour. We'll see on that. Perfect person, perfect time. Constance Hunter joins us, working with Julia Coronado at MacroPolicy Perspectives. Constance, I want to go to the I want to go to the business spirit given sub 2% GDP with an inflation impulse. I have a 10-year real yield back to 2009 levels where it pretty much sustained 2004 to the crisis and then 2009. Does the higher inflation-adjusted yield, does that begin to impinge now on American business?
Well, that is the question, Tom, and I think it has been impinging on American business, right? When we look at financial conditions for those who can access the capital markets, financial conditions look fairly accommodative, right? We have higher equity markets, people are going to the bond market and issuing debt. when you look at financial conditions for households, when you look at financial conditions for small and medium-sized businesses, they are tighter. However, with that said, we are still seeing record new business formation. So there is something happening under the hood of this economy that is different than previous cycles. And as we know, history rhymes, it doesn't repeat.
Very good. Constance, obviously the market was looking for, if you look at consensus, was looking for a slowdown in GDP in this quarter, but not this low. Does that change your thoughts about, I don't know, what the Fed will do, what investors should do, what you guys should do there at MacroPolicy Perspectives?
Yeah, well, as you can imagine, our Bloomberg chat has been very active this morning with amongst ourselves and with our clients, right? So the view, of course, is this makes it a more difficult calculus for the Fed, and certainly that higher inflation number gives pause. I will say, though, if you think about, so there's two things, and they're not necessarily congruent things, because we're at a time when we're in an inflection point, and in inflection points, data gets very funky, right? And we've been pointing that out with some of the contradictions that we see within the labor market data, both the official data and some of the web scraping that we're doing with regard to company intentions to hire and fire, right? And so what we have here is we have stronger services consumption, which quite honestly, I think economists have been waiting for that outside services consumption for several quarters. And goods consumption just persisted in being strong. Finally, we have the decline in goods consumption. That means that in all likelihood, this low to negative pricing we're seeing in goods will continue. That will give some relief to overall CPI.
Constance, I want to talk, Constance, about the bigger picture. The mail, and Paul gets all the love, Lisa gets the love notes, Constance. I get hate mail. And the hate mail I get is simple. You guys are nuts. Most of us feel like it's a recession, and we're getting crushed by inflation. If we have a run rate sub 2% GDP, and the fancy people are living large, what portion of America now is in recession with an elevated inflation rate? It's got to be, what, half the country?
Well, that's an excellent question, and I have to delve into the numbers to give an exact figure, but you bring up a very good point. And as you know, every time we get the CPI numbers, I do a table that shows the annualized pace of individual components since February 2020. And while, yes, the month-over-month pace seems to be doing better and the year-over-year pace is doing better than the height, what people are anchoring to is that cumulative increase that they have to pay. And they can't get out of paying things like, for example, like vehicle insurance. It's not easy to substitute. Homeowners insurance, not easy to substitute. And these really do take a bite. Now, with that said, on vehicle insurance, it looks like that was a one-off. 3 state regulators, California, New York, and New Jersey, allowed insurers to increase the vehicle insurance price. So that looks like it was a one-off, but still the mood is that it's hard to control where price increases are coming from, and there continue to be rolling surprises.
Bloomberg surveillance, we always go to anecdotal evidence. Joining us now, Paul Sweeney with a hate mail from New Jersey. How bad is the insurance story?
It is. I mean, it's crazy here, but that's just one of the many costs of living in
these
the
are fixed costs. These are not like variable costs. I mean, it's like Hamburg. Very quickly, our data check markets deteriorate. SPX at negative 1.3%, NASDAQ negative 1.7%. VIX is actually pretty quiescent, still under 17, 16.86. And that 10-year real yield, sum it all up 6 massive basis points, 2.29%. That takes us back to 2009 and even back to 2006.
And Tom, red headline across the Bloomberg terminal: traders push back timing of first Fed rate cut to December. Constance, do you even maybe take it a little bit further and think about, is this Fed even contemplating a rate hike? Is that something is possible?
I don't think we're ready for a rate hike because one, concomitant with this weaker growth is going to be weaker jobs data. So we pushed back the first rate cut to September, but I really think there's a case for we get up to 5% on the 10-year before this is all over.
Interesting. All right, Constance, thank you so much for joining us. Constance Hunter, Senior Advisor, MacroPolicy Perspectives. Everybody, Tom, I think is doing the same thing. They're kind of on their various chats, talking with their colleagues, talking with their teammates, figuring out, all right, what does this GDP print mean? Do we need to rethink some things.
And do I have time to be on Bloomberg surveillance? We're working it right now, folks. We're blowing up the hour for you with futures negative 1.3%, SPX futures negative 66. Quickly, our news in New York City, Michael Barr.
Tom, Paul, Lisa, thank you very much. Former President Donald Trump continues to insist that he is immune from criminal prosecution for trying to overturn the 2020 election. Now the Supreme Court will hear arguments today. Bloomberg law host June Grasso has the latest.
The Supreme Court will hear arguments over Donald Trump's claim of immunity from criminal charges for trying to overturn the 2020 election. It's historic because the court has never said whether a former president is shielded from prosecution for actions taken while in the White House. However, there is a possibility that the justices won't conclusively resolve the issue and instead will kick the case back to the district court judge to review the particular allegations against Trump. In New York, June Grasso, Bloomberg Radio.
Later this morning, Donald Trump will be back in a New York City courtroom as his hush money trial resumes. An Arizona grand jury indicted 18 people for their alleged roles in an effort to overturn the results of the 2020 presidential election in the state. The defendants were allegedly involved in a so-called fake electors scheme in which they signed a document falsely claiming that Donald Trump won Arizona. Several of the former president's close associates, including his former attorney, Rudy Giuliani, and his former chief of staff, Mark Meadows, were indicted. Arizona Attorney General Chris Mays.
The scheme, had it succeeded, would have deprived Arizona's voters of their right to have their votes counted for their chosen president. It effectively would have made their right to vote meaningless.
AG Chris Mays. Trump was not indicted, but he is referred to in the indictment as an unindicted co-conspirator. Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Market's still adjusting. The VIX is going to get out to 17 here in a minute. Got the 10-year chart up. We do this in the Bloomberg. We can give you, and for the pros, the standard deviation on any given series. It's a TE function, trading envelope. And Paul, I got room to move on. The 10-year yield, 4.72%, up from that comfortable 4.65%. In two standard deviations out right now is 4.79%.
Yep.
You get to 480, you're starting to say, could we get to a 5% 10-year yield?
Yeah, Ira Jersey was just calling that out when we were chatting with him earlier, this technical kind of resistance at 4.7%. You get above that, he's kind of thinking there's a 5 handle out there for the 10-year treasury. We already see it here on the 2-year, Tom, 5.01% on the 2-year.
Trying to color it out for you, you know, the bids here, the green, the red that's blinking on the terminal. And the basic idea is a generalization, I'm going to say this. We haven't found a bid yet. I mean, we're churning and all that, but here at 9:13 Wall Street time, Paul, I can't say we've captured a bid on the equity market.
No, we don't. I mean, the S&P 500, again, off about 1.38% here. So some definite concerns out there on the marketplace. Just kind of, it just feels like uncertainty as to what this Fed will do. And again, the Fed futures are suggesting that if there is a rate cut in 2024, that might not be till December. Remember how we started the year, Tom? The market discounting 6 rate cuts in 2024. Now we're working to see if we get the one.
I'm way more interested in if Anna Wong tells me she's got to go out and dust off a recession model.
Right.
That's way the parlor game. I'm exhausted by it. Where there's 7 rate cuts, you know, it's like, it's just, to me, it's almost too much. The tape deteriorates, negative 71 on the SPX. Dow futures are going to print a negative 500, negative 493 right now. Please stay with us. More data checks this hour. This is Bloomberg Surveillance.
Weekdays. 6 a.m. 7 a.m. 9 a.m. 10 a.m. 11 a.m. 12 a.m. 1 a.m. 2 a.m. 3 a.m. 4 a.m. 5 a.m. 6 a.m. 7 a.m. 8 a.m. 9 a.m. 10 a.m. 11 a.m. 12 a.m. 1 a.m. 2 a.m. 3 a.m. 4 a.m. 5 a.m. 6 a.m. 7 a.m. 8 a.m. 9 a.m. 10 a.m. 11 a.m. 12 a.m. 1 a.m. 2 a.m. 3 a.m. 4 a.m. 5 a.m. 6 a.m. 7 a.m. 8 a.m. 9 a.m. 10 a.m. 11 a.m. 12 a.m. 1 a.m. 2 a.m. 3 a.m. 4 a.m. 5 a.m. 6 a.m. 7 a.m. 8 a.m. 9 a.m. 10 a.m. 11 a.m. 12
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Markets deteriorating after we learned the U.S. economy grew last quarter at the slowest pace in 2 years. Add to that tech stocks that were already taking a hit following disappointing results from Meta. Meta shares down 15%. After the bell, all eyes on Alphabet, Microsoft. Alphabet down 4%, Microsoft down 2%. So as far as futures, we have NASDAQ, Dow, S&P futures all down more than 1%. NASDAQ futures down 324 points. Dow futures down 471. S&P futures down 70. Over to the 2-year yield at 5.01%. That's up 8 basis points. The 10-year yield at 4.73%, and that's up 8 basis points. Now, since we're talking tech, I want to get to Micron Technology. It's been awarded up to $13.6 billion in grants and loans from the Biden administration. That's for new memory chip factories in the U.S. But shares right now, they're down 2%. And IBM taking a hit, down 10% after weak consulting unit sales. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Lisa. Greatly appreciate it. Here's the memo. There is no bid to the market. We haven't captured that bid. And after the economic data at 8:30, there's a point where it comes in.
Yeah.
Buy the dip. We're dip-free this morning. Futures a negative 71. We're going to get a negative 500 print on Dow. We're not there yet. Negative 479. While Lisa was giving you the report, the VIX out of stick, 17.01. What I've learned over the years is when there's important news, such as 1.6 GDP with an inflation impulse, instead of stressing about getting the right guest, just book quality people, and you'll be shocked how their view fits the news flow. Philip Komar joins us now with MRB Partners, and he is one of those people. It's not that he's glass half empty, but he's just saying, would everybody get their radar up? What does this report today signal for someone like you that has a respect for caution?
Yeah, I think the issue is everybody's taking the GDP print as being soft here, and I think it's much stronger than people think. I mean, much of the drag came from external demand. So you start stripping that out, and you take final sales to domestic consumers, and you're talking about 3%, maybe slightly higher.
So domestic final sales.
Domestic final sales
solid.
Is solid, and particularly the service sector is solid. So if you're in the Fed's seat here,
right,
you've got a sticky inflation print, and you're in the Fed seat and you're saying, have I done my job? Well, no, the domestic economy is not weakening. It's
right,
growing above trend. This is a problem for the Fed.
Okay, I'm going to translate this for you here. We just had Ira Jersey on Take Your Daughter to Work Week. Elena was doing the algebraic math.
Yeah.
7th grade. I mean, it's like cruel and unusual punishment for Ira Jersey. But the bottom line is, let me translate what Phil just said. Import dynamics were pretty substantial. And so what the pros do, and good morning, Bettina Dalton, a name from Fidelity with Peter Lynch years ago.
Wow.
And for Bettina Dalton, domestic final sales was religion. And the answer is, it's pretty sprightly because the import dynamics messed up a 1.6% number.
Right,
That's too many. Too many moving. I got a headache. That's too many moving parts.
Well, I think if you look at it though, the big mistake from the Fed, and everybody's trying to say, what does this mean for the Fed? We got a sticky inflation, bond yields are up. I mean, that has been our call, that the economy was going to go into a no landing camp, which I think the market revised to. Inflation was going to be stickier and surprise the upside, and was going to shut the door on the Fed's ability to rate cut. The big mistake that Powell and company have made is that they assumed policy setting was restrictive. So in other words, time worked against the economy and would bring down inflation. If you flip that on its head and say policy hasn't become restrictive and the premature inversion of the yield curve is further subsidization, now you start to look at the domestic demand picture, which has been solid. You're still looking at sticky inflation. The Fed's job's probably not done, and that's what the bond market's coming to grips with right now. And I think that's the challenge, which is unwound those deep rate cuts.
Paul, 2-year yield, the Sweeney yield is 5.02%.
Exactly. With that 2-year yield popping up above 5%, do I have to start thinking about a rate hike somewhere?
Lindsay Piegza yesterday.
I know.
You know.
Well, and that's ultimately the question. If I was running the central bank, we would have been debating whether the job was done and when to hike next. Could we stay the whole year without hiking? Not when do we cut and how deep do we cut? And I think that was the mistake. And it was wedded in the idea that somehow 2.5 or 2.6 was a long-term equilibrium. Therefore, a 5 handle on policy rate must be restrictive. But all of the economic data, all of the market data has told you that that's not the case, that the economy is gradually gaining further strength. Yeah, it's been dragged down by external forces, but guess what? The global economy is firming at the same time. Trade cycle is starting to pick up. So the point of the Fed is it's going to have stickier inflation. Maybe we got a hot print here in inflation. It could subside a little bit, but it's not coming down to near their 2% target. And that's the problem for the Fed.
With that backdrop, what do we do in investing these days? Yeah,
so the equity market becomes challenging here, right? So we had up until April, we had a Goldilocks scenario or a free lunch. And what I mean by that is that you had, coming into the beginning of this year, you had a subdued growth or a soft landing scenario because you were going to get deep Fed rate cuts. And from January to March, we had bond yields rising, but it was because we were revising that soft landing to a no landing camp. So earnings expectations were outpacing the rise in bond yields. April, that started to switch. The bond market woke up to the idea that inflation was sticky, and it had to reprice that. It already priced in solid growth, and now it's pricing up higher bond yields based on that. And that's the problem. That your free lunch is gone, Goldilocks is over. Okay. Now it's volatility and selectivity is really crucial.
I'm going to steal that line from you. I like that. Goldilocks is over. But within the ambiguity of a sprightly economy and the rate regime we're in, can equities prosper? I mean, I'm not talking stupid up 40% a year, but can you get a single-digit return out of equities?
Yeah, you can. Yeah, absolutely, because if policy is not restrictive, the economy is still in good shape. Earnings are still going to be solid here, so that's not the problem. The problem is that some of those high flyers got way stretched, and they're both not only on valuations but earnings expectations. And one of the reasons why we've leaned against tech and growth-related behemoths, if you will. But I think some of the other pockets of the market can generate those. You've got large cap financials look like they can surprise to the upside. They're poised well in a decent macro backdrop. Some of the industrial space, whether it's aerospace and defense or some transports. You've got energy, looks okay.
Okay, I can't, there's a huge pulse, folks. You can't see it out on YouTube or certainly on Apple CarPlay, but the red and green is working on the Bloomberg terminal right now. Paul, the 10-year real yield just rounded up to 2.31%. As we said earlier with Constance, that impinges business. Like the small business America working off charge cards is crushed by that.
Yep, absolutely. I know in your notes you also mentioned, and this is something we've been hearing more and more about over the last 4 or 5 months, I would say, Japan. Yeah. I mean, Tom and I started in the business when Japan was definitely the place to be. No. Then we haven't heard about it for 25 or 30 years.
That's right, yeah.
Why are we hearing about it more? Why are people like you and Warren Buffett talking about Japan?
Yeah, so Japan, despite all the talk about secular stagnation, that was a false narrative. Japan's the only economy that actually went into a secular stagnation narrative for about 20 years. The U.S. and Euro area didn't, despite us pretending it, or lots of people pretending it was. Japan's exited that scenario, and part of that's because of global forces. Higher inflation has dragged up inflation within Japan. External demand has helped, but there's been a restructuring of the corporate sector through this last 15 years, and now with stronger final demand, a bit higher price pressures globally, it's pulling it back out. There's a lot of value in those equities if you can start to unlock it. And so Japan becomes an appealing play. It's almost like an inflation hedge within an inflationary world, and it's participating based on that. But there's some domestic demand dynamics in
Tokyo remote, Tom. It's got to be in the cards.
I see it. You know, I can see it. The Imperial Hotel from the Frank Lloyd Wright bar there. It makes sense. Phil Comer, this was brilliant. Always well timed, to say the least. Thank you so much. Here's what we're going to do forward, folks. Alan Zentner publishing with Jim Caron moments ago. Real GDP rose 1.6%. The release was lower, but it was driven by lower consumption, trade, and the drag from inventories that we've been talking about. We'll get much more from Morgan Stanley there. Coming up for your next half hour on Apple CarPlay, on YouTube, all of our other events as well. Good morning, Bloomberg 1130. We have Michael McKee on the economics, and we're really going to delve into the Fed debate with McKee to a changed May 1 meeting. And moments ago, we are thrilled to bring you a gentleman who's been dead on the market. John Stoltzfus will join us from Oppenheimer and Company. No, he's not going to talk about Anglo-American. That was a joke.
Oh, okay, very
good. John Stoltzfus will be with us to talk about the equity markets and how they adjust to what we see. Maybe a little bit of a bid in the SPX, negative 68 on futures, Dow futures just tricked through 500, negative 520 on Dow futures. NASDAQ down 1.73%. The Sweeney number, there it is, 5.01%.
Yep, boom. That gets your attention. That is the 5.01.
How much money is going to move into money market funds
exactly
to
right.
the weekend?
Yep.
Stay with us worldwide. Michael Barr, Lisa Mateo, Paul Sweeney, Bloomberg Surveillance.
Michael McKee wandering around the food court. We brought him into the studio. He's going to help us break down what happened to the U.S. economy in the first quarter. We were looking for a slowdown, but not that slow. That's coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene, Paul Sweeney with your opening bell report. Oh, how are these markets going to react after the first read on first quarter growth in the U.S. came in a lot weaker than expected? GDP increased 1.6% annualized rate. Personal spending rose 2.5% pace. And closely watched measure of underlying inflation advanced more than expected. Jobless claims came in weaker too. So let's get right to it. There's red across the screen right now. S&P 500 down more than 1%. 67 points. Down more than 1% at 505 points. And there goes the NASDAQ ticking in, down more than 2%, down 330 points. Let's get to the bond market. The 2-year yield at 5.02%. That's up 9 basis points. The 10-year yield at 4.73%, and that's up 9 basis points. At the open, we have to check in with Meta because that had a lot to do with it in the beginning this morning. Meta shares there down. We have Meta shares there down this morning, but we also have Google shares. They're down 4%. We have Microsoft down 3%. They're reporting at the close along with Intel, so we're definitely going to keep an eye on that today, as far as these tech stocks are concerned. That is your Bloomberg opening bell report. Paul and Tom.
What we're going to do here, seriously, folks, markets on the move. We'll give you more data checks into this. And Molly Smith, joined by, who's with Molly today?
I think I might be her.
It might be you.
I might be her wingman.
We're going to drive into 10 a.m. here with Paul Sweeney and Molly Smith as well. Good morning on YouTube. Huge response out there. Thank you. Here's what you got to know. I mean, McKee, when he was a young buck, was with Gorbachev and Reagan. But what you don't know is McKee was there in 1963 for the first red hotline where Washington said the quick brown fox jumped over the lazy dog's back. And they set up the red phone hotline. Folks, McKee is so wired in, he's got a red phone on his desk here at Bloomberg, which goes right into the Eccles building right now. How's the last 20 minutes been? How does the Fed change their debate after your red phone call?
Well, I don't think they changed it at all because underneath the headline number, which Lisa was just talking about, a disappointment, 1.6%, there is not a lot of evidence that the economy is in bad shape. Personal consumption at 2.5%, lower than 3.3% last time, lower than people anticipated, but still reasonably strong. And all of the decline was in goods. Services spending was very strong. Non-residential fixed investment was up by 2.9%, businesses hanging in there. What really hurt was inventories did not build as much as anticipated, and net exports subtracted from growth.
Okay, let's stop here.
Well, we sold a lot of stuff overseas.
Okay, we mentioned between adult and domestic final sales was actually good.
Yes.
Let's go to the math. Okay, there's an algebra function, folks. We don't do too much algebra on Thursday. But on the back end is plus NX, and that is exports minus imports.
Yes.
Imports were ginormous, so that part of the function was a teensy-weensy number, right?
Right.
I did that okay?
We imported more than we exported, and that question, I think, is on the CFA exam. You're giving a little hint here to people.
Danny Blanchflower said to me, Tom, don't give up the day job.
Imports were up 7.2%, exports up only 0.9%. So that was a problem. And then the final problem, which is what Wall Street is fixated on, is the quarterly PCE number, especially the core, much stronger than expected, up at 3.7%. It was 1.6% last quarter rather. Now, this could be because January and February's PCE numbers were revised higher, or it could be that we're going to get a big surprise tomorrow. And
that's where I wanted to go, Paul. Paul's hanging on.
I'm asking
a higher number. Yeah.
I thought we were getting all our PCE stuff tomorrow. They snuck one in today. The core PCE price index, 3.7. What is that?
Well, basically what the government does is use the PCE, they create what they call the PCE deflator. It's the same thing that the Fed is looking at, basically, and they use that to take the inflation impact out of GDP. And because inflation was higher this month, that also contributed to GDP being smaller because some of it was inflation.
Right.
Now, they take a measurement of PCE every month. And we've gotten the January, February, we'll get to March tomorrow. But they've already put the March into the number and given you a quarterly average.
More data checks this hour. Down negative 500, SPX negative 71. NASDAQ down 1.9%. Some of that off Facebook. The VIX out of stick, 17.07. The Sweeney statistic, 5.01% on the 2-year yield. The real yield's what I'm looking at. Wow, 2.30%. Michael McKee with us, and we are honored to have John Stoltzfus with us from OPCO here in the back end of this half hour. Paul?
Jobless market, still strong. That's just my takeaway.
Well, that's another reason the Fed's not going to make any changes based on what we got today, because the economy is still strong enough under the headline number.
Yep.
Inflation is still high, and the labor market is still strong. I mean, we're early in the earnings season, so we don't have a whole...
You want to weigh in on Microsoft this afternoon?
We don't have a whole lot of numbers, but analysts are expecting a decline in earnings per share for the quarter. Companies may be having not a great quarter, but they're not laying off people because of it. So it suggests that at this point, they're still thinking there's some strength out there. They're going to need people on the assembly line.
Come on, we got domestic final sales of 3%. I think you just told me we've got some form of elevated inflation. I mean, we have a domestic nominal GDP that's robust. That's what Tom Sargent would say. It's robust.
Yeah.
It's like above 4%. Above 5%?
Well, not with these numbers. Well, we'll see tomorrow.
We'll
because
see.
We'll
I
get
agree.
the number tomorrow. And the Fed is going to be more concerned with tomorrow's number because they want to see what the most recent inflation data show. If they come in as expected, you might have the markets back off a little bit of their gloom feeling today. But if they come in stronger than is forecast, then watch out below.
So again, on that 1.6% print, the GDP annualized, within that, the consumer was still strong. Is that one of the takeaways?
Yeah, we've had extraordinarily strong consumer spending for quite some time, basically well over what the government thinks or what the Fed thinks is sort of sustainable. And the fourth quarter was 3.3%, the third quarter was 3.1%, 2.5% is still in that ballpark. So we're not looking at something bad. Services spending up 4%. Now, that is going to be partially attributed to inflation.
Is this pandemic tinged?
Probably not. We're
beyond the pandemic.
We're probably beyond the pandemic, and we're into the sort of normal variations that we get. Historically, first quarter GDP has tended to come in weaker than the rest of the year. So we didn't see that last year, but we could see it, reverting to that if that is indeed a mean for this year.
So people, is the market taking bets here that this PCE deflator number tomorrow will probably come in higher than expected?
I think they're leaning that way now. We'll take a look at if anybody changes their forecast. But you can go back and do some of the math and try to figure it out. But we'll have to see how they react. And also the spending numbers we get tomorrow. Are they going to be as robust as anticipated? 0.6 gain. Is it going to be that high because personal consumption was down a little?
Now, let me do a data check here, folks. It's down negative 530. It deteriorates down 1.4%. SPX down negative 71. Let me give you those levels. Dow Jones under 38,000, 37,912. Standard & Poor's 500 exactly 5,000. Back from, remember 5,200. That was a cup of coffee ago. NASDAQ 100, 17,200. But I do want to make clear, Microsoft and Google enjoying the carnage today, and they trade down as well. Brent 87.88. The Sweeney statistic 5.01% on the 2-year. The 10-year yield up 8 basis points, 4.72%. Michael, one final question here. The doves at the Fed. The wonderful Austin Goolsbee out of Chicago, he's been getting a little more respectful in his rhetoric of inflation. After all this is over, the Fed meeting and all, and your piercing questions, do the doves capitulate? Is that sort of the next step for Fed rhetoric?
That could be after the press conference. We'll see what Jay Powell has to say, and I suspect if we get anything like what we're thinking we might get tomorrow, that it basically tells them to send the message that we're not in a hurry to cut rates. And then as the individual Fed officials come out, they will probably, I'm sure they will endorse that. Because at this point, with inflation where it is, you don't want to be cutting rates.
Michael McKee, on short notice, thank you so much. Just a terrific Fed brief. John Stoltzfus with us here in a moment on the equity markets. The Dow, negative 524. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Developing news. New York's highest court this morning overturned Harvey Weinstein's 2020 rape conviction, finding the judge at the landmark Me Too trial prejudiced the ex-movie mogul with improper rulings including a decision to let women testify about allegations that weren't part of the case. The State Court of Appeals ruling ordered a new trial. Weinstein, who is 72, has been serving a 23-year sentence in a New York prison following his conviction on charges of a criminal sex act on a production assistant in 2006 and rape in the third degree for an attack on an aspiring actress in 2013. He will remain imprisoned because he was convicted in Los Angeles in 2022 of another rape and sentenced to 16 years in prison. Former President Donald Trump did some campaigning this morning in Manhattan. He greeted construction workers on a midtown street and spoke to reporters.
We're leading in the country by a lot. Poll just came out a little while ago, as you saw yesterday, that we're up in every swing state and up by a lot in every swing state. So I think we're going to do very well.
Later this morning, Donald Trump will be back in a New York City courtroom as his hush money trial continues. Also today, the Supreme Court hears oral arguments in a case stemming from the January 6th riot at the Capitol. Donald Trump insists he should be immune from prosecution for anything he did while in office. An Arizona grand jury has indicted former President Donald Trump's chief of staff, Mark Meadows, lawyer Rudy Giuliani, and 16 others in an election interference case related to the 2020 presidential vote. The indictment names 11 Republicans who submitted a document to Congress falsely declaring that Trump won Arizona in 2020. Arizona Attorney General Chris Mays.
We're here because justice demands an answer to the efforts that the defendants and other unindicted co-conspirators allegedly took to undermine the will of Arizona's voters during the 2020 presidential election.
AG Chris Mays. Finally, tonight begins the 2024 NFL Draft in Detroit. Quarterback Caleb Williams will likely go to Chicago first overall. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
So the Bears, do they just suddenly get good? Is it like hockey where after 3 years of draft picks, it's like, oh, they've gotten better?
If this Caleb player, Williamson, is as good as people think, that's a big step in the right direction. And you talk to a lot of folks in football that I listen to, hear, and read, and so on. Apparently, they've done a great job drafting over the last 2-3 years, and so they've got a lot of young players. And if this quarterback is the real deal, then maybe they're set up for a nice run there, which would be good for the NFL to have Chicago.
Is he like the guy Kansas City, Mahomes? Michael Barr, weigh in here. Is this guy just like the second coming of Mahomes?
Well, let's be honest. We'll see. I mean, he obviously he looked great when he was with playing in college, but it's something about college, and then you go to the pros, and then blam. I mean, look at Tim Tebow. He looked great in college. And then, unfortunately, it didn't work out very well. But I'll tell you the guy I am looking for, his wideout, is Marvin Harrison Jr. Does that name sound familiar? He's going out in the wideout. He's probably going to be like the number 2 and number 3 pick overall. So I want to see how that.
So the Lions won't get him because they were so good last year. They're number 40.
Well, now there's a rumor that Detroit may trade up. We'll see what's going to happen.
Just quickly here, what's the diner everybody has to go to in Detroit for the draft? Where do I get a decent breakfast there before the
Lafayette,
draft?
Coney Island.
There we go. News you need to know. Michael Barr, thank you so much. With the draft coming up in Detroit tonight, the tape deteriorates. The Dow negative 506, 1.3%. From New York, Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks getting crushed this morning as a handful of big techs sold off while data showed a significant economic slowdown. We have the NASDAQ down more than 1.5%, the Dow down more than 1%, same for the S&P 500. As we get over to the bond market, the 2-year yield at 5.00%, that's up 7 basis points. The 10-year yield at 4.72%, that's up 7 basis points. What I want to do is dig a little bit deeper into the stocks. Let's go to the IMAP function on your terminal. Follow along, play along. The biggest drag coming from communication services. You go further, you see media entertainment. Dig further under that hood, we have interactive media and services. And yes, at the top, that's where you get Meta. Their shares down 13%. That's followed by Alphabet down nearly 4%. And they're reporting after the bell along with Microsoft. Microsoft down 4%, along with Intel also reporting later this afternoon. Intel, though, up nearly 1%. That is your Bloomberg Business Flash. Tom and Paul.
She's talking too much to you. Is Lisa Mateo doing the Bloomberg heat map now?
I think she's got it. I mean, it's a great function.
I was dazzled there.
It's a great function.
You know, basically, I know red is down, green is up, right?
Yep.
That's as sophisticated as it gets.
Yeah.
There's a tech sell-off here. Everything's selling off.
That's all right. It's all right. We're not gonna, nobody's
Sarah and I got, on YouTube, we got the data screen up here, and it's how about Google's off 4%.
Yeah,
Microsoft's 4.5%.
Yeah, the tech guys saw off the Meta news from last night, spooked a lot of people. That's off double digits here.
Tim
Meta's
and
off
Caron
13%
in this afternoon.
Yep,
redux it again. Do you know they're speaking to our "Take Your Children to Weep" cherubs?
Oh yeah,
they didn't let you or me speak.
No, of course not.
You got that right.
Yeah, we're working too much.
Scare the children.
Scare them. Do your math. We are honored on short notice to bring in someone in a very narrow group. I'm going to add the technician, Ralph Ancampora here, Edward Yardeni. There are others out there. Brian Belsky at BMO's been, I think, an Uber bull as well. John Stoltzfus has led the way. And when days like this, he says, you know what? It's opportunistic. About, I don't know, a month, 2 months ago, he started to frame out from 5,200 SPX up to 5,500. 5,500 SPX is up 10% from this 5,000 level. John Stoltzfus of OpCo. John, how do I stay in markets on days like this?
Well, thanks for having me on the show, Tom. I've got to say this. I think the question, that traders ask right away is that should I go or should I stay? Like the old hit song. And there's a passing fancy potential here, capricious nature of the fast reaction. But for investors who are investing for anywhere from 2, 3, 5, 7 years forward, out, it's a quick moment to pause and ponder, check out the babies that are getting chucked out with the bathwater, whether it's in technology, industrials, consumer discretionary, and a host of other cyclical stocks in particular, we'd have to think is worth checking the opportunity that's available, because the trend, we believe, is our friend, and the trend is led by the Fed, which has acted incredibly responsible this Fed funds hike cycle, reflecting what we call the Ben Bernanke legacy.
Yeah, John comes on, the market's negative 600, and he lifts it down to negative 580. He's a force.
Exactly. Hey, John, what do you think? Some of the reporting coming out and some of the words coming off of Wall Street this morning is maybe calling into question whether the Fed will cut at all in 24. How do you think the Fed's going to look at some of this data, and then, of course, the important PCE data tomorrow?
I think we'll have to see what happens with that data tomorrow. I think when Mike McKee was talking, he really hit some important spots to consider there. But what I would say is this is effectively, we came into this year when a lot of people were expecting, I think it went from, it was 5 to 7 up to 11 cuts. People thought the economy was falling apart, apparently. We looked at it. We thought the Fed was going to cut likely 2, which rubbed up against the Fed's 3 sort of intimated cuts that they were talking about early on. And I think they still had that. Who knows where we're headed in terms of the near-term commentary. Right. But we've got to say, we think the economy, as was mentioned earlier, the consumer is good. business remarkably resilient, and we're still early in the earnings season, but some things have been good.
Okay, I'm going to make the observation that money market funds are going to become more comfortable here. Sweeney's on the 5.02% 2-year yield. That's going to be comfortable here. And you're going to tell me, but share buybacks are going to click in. Are share buybacks to the rescue of the market?
I don't think it's just share buybacks. I would think it really has to do with the fact that earnings and revenue, particularly earnings growth, has been significantly resilient, and revenue growth hasn't really, on an idiosyncratic basis, it can surely disappoint. But overall, it shows a resilience that is maintained, which likely tells us corporations are better, and naturally so after 15 years of successive crises, at navigating tougher environments. And with AI, just where AI is today, not where it's going to be in the future, this is likely what's going on.
EIEIO. Paul, Stoltzfus is crater in the market, negative 620 on the Dow. Stoltzfus' fault.
John, I know you guys took your year-end price target up to, I guess, 5,500 on the S&P. What's kind of the driver? Is that an earnings-driven market, or is that a Fed-driven market? What are the drivers there?
It's a combination of the two. It's a combination of the Fed. It's earnings-driven. It has to do with innovation, and it's as we saw the rally from the, late October of last year, broadening to the other sectors, expectations that innovation will feed into other sectors other than technology and consumer discretionary and industrials. And within that kind of a feature, the nice thing is you have several things playing. It's not it's a fundamentally a better story towards a normalization where bond issuers pay for the privilege of borrowing money. Bond buyers get something in return. It hurts the fast crowd, because they like to be highly leveraged, and they will protest the Fed's reluctance to cut rates drastically. And I think Powell does not want to. He certainly doesn't want to be Arthur Burns, and he doesn't want to have to become Paul Volcker again. I've been doing this. I came in during the period where Volcker was beginning his second term, and so I've lived with the Fed through 15 years of Greenspan, and Greenspan was almost a science project.
What is this, a therapy hour?
He was living
John,
with inflation that was sticky.
We're almost to negative 700 in the Dow. Go away. John Stoltzfus with us from OPCO. We really look forward to his research report from Oppenheimer and Company. He has been in this market. He has enjoyed a multi-year bull market. Paul, I'm sort of out of words here. I mean, what do you think?
I mean, this is I think the market. I'm just looking at some of the Bloomberg reporting, and it's the market saying, all right, maybe stagflation needs to become back into the conversation. Maybe the Fed can hold back even more or even longer in terms of cutting rates here. So again, we're seeing it in the S&P 500 off about 1.46% here, and the yields are higher. Time as we've been calling out, the 10 years up about 8 basis points, 4.72%, and the 2-year real spot on, right on 5.01%.
Thank you to our team today. They blew up the show 3 times.
Yep.
Particularly thank you, Rich. Who was the wonderful former NFL player that was going to give us wisdom here? From Jordan Reed from Washington, the Redskins, the Commanders. Thank you so much, Jordan Reed. We really look forward to getting you on again. With the markets the way they were, we had to walk away from a special segment on the NFL draft. But our team just did a great job, very flexible, trying to give you bond and equity and, of course, economics here of these markets in a real shock. I'm going to be blunt, folks, into the 10 o'clock hour, the Molly Smith show. It's just simple here. I can't give you a bid on the market. I got a Dow, negative 660, SPX, negative 75. I'm glad Stoltzfus, he called up, he says, I'm not coming on unless I pick the next song. Darling, you've got to let me know, should I stay or should I go? I'm leaving.
So you got to let me know, should I stay or should I go? It's always tease, tease, tease. You're happy when I'm on my knees.
One day it's fine and next it's black. So if you want me off your back, well come on and let me know. Should I stay or should I go?